Let's see if we're up at least. Check 1, 2, mic check. Doom, baby. Woo! Still selling right now. What's going on, baby? And I'm buying this right now, and I'm like, oh, I've got enough. I got 20 contracts right now at 520. Blech. But I ain't buying any shit unless we get down to like 515 or the daily trigger here. So no more. Done buying. Woo. And it probably isn't done yet either. I'm gonna head right over there right now. We're never gonna bother. Woof! Blooding it in the morning, baby. Whoa! They didn't even give a chance. It was all night long too, wasn't it? I don't know if it was all night long. I think I caught back up in the morning, and then they sold it one more time up here in the cross and the half-hour trigger. And we're looking for at least 5:16.16 to 5:15.51, and I wouldn't even be surprised if we went all the way down to 5:12 because we don't have Jolts until 10 a.m. I did grab a rack of 520Cs or just 10, not a rack, and then I grabbed another 10 for 28 cents, 40 and 28 cents, and I'm like, I ain't buying shit until we hit bottom. And you can actually, I ain't buying no more because I'm looking at Bookmap right now, and I'm like, well, it looks like there's more down to go here. Now, last night I did make a post for you showing you the unemployment and jobs data from prior examples when unemployment would ramp. And the real risk to the market here in the background. Now, I don't think that's in play at this moment, but I'm sure that this has something to do with the front running of it and the potential news that's coming out the rest of the week for unemployment, trying to front run that news. So we would have a major role in the market, not a correction, not a pullback, none of that kind of stuff. So we'll see what the jobs report says this morning. I'm fascinated by finding out what the jobs report says, and I am fascinated by the unemployment figures because that 4% number is like if we start to ramp over that 4% unemployment, it's bad. You've got velocity in that move, and what will end up happening is you can get rid of all. Why is my voice all weird? Okay, you can get rid of all discussion about will the Fed cut, when they'll cut. They will run this market straight down to like fucking not zero, but zero basically, as unemployment ramps in the background. And he will be forced to cut. He won't have a choice. He will chase those cuts all the way down to zero as unemployment ramps. So that's a big one for me at least, and that is cause for concern, at least into Friday, possibly even Monday, because every report the rest of this week has to do with unemployment, jobs, and the volatility surrounding that. And he gets put into a corner on this if those reports are no good. You need to understand that because if you start ramping up on that unemployment, they will be behind the ball. They'll be behind the cuts. No matter what they say to you, no matter what they say, we're not going to cut all this. There's not an example in history, not one example in history where unemployment ramps and they do not chase cutting to zero. And especially in recent history, it's never happened. It's always been a matter of, hold on one second here. I'm spitting this morning. It's always been a matter of the Fed over tightening this case too quick, where you do the damage, you don't see the damage as of yet. And I would even wager, if that unemployment data is bad, that no matter what they tell you, the market will roll over in a significant way, won't stop, straight fucking down, and it'll come back. You'll get a chance to exit the market orderly and all that kind of stuff, but they will front run just pure rate cuts, and it just won't stop. So I'm fascinated by that. Now, we aren't there yet right now. That data is not out. I am going to assume that all of the data that comes out, Jolts, unemployment, employment, unemployment, ADP benefits, all that kind of stuff, is going to be massaged. Now, if it's not massaged and it's ugly, we get velocity in those unemployment numbers, you are going to see in real time, just like COVID. It'd be very similar. You just start. I don't know how long you guys been in the market, but we have many examples in the past going into the 90s, 80s. Doesn't matter. They roll this fucker down and it does not stop. It just keeps going and going and going. So I'm fascinated by this because this should be a pullback. We're not in a correction. We're not below the daily trigger right now in any way, shape, or form. But the velocity of this move from yesterday into this morning is cause for concern. We haven't had any velocity in price to the downside in a significant amount of time. And this, to me, just looks like front running right here. Like they want to front run all this volatility, and they want to front run price if they can. And already know there's bond people that are out there trying to time this and get this ball rolling. Like, when are we getting rate cuts? And we don't want to hear anything you have to say about doing one, not back to back, all this other shit you're talking about, Jerome. We're going to front run this just in case because we don't believe you. So I'm fascinated by it. I was also fascinated by news that came out yesterday saying that the Fed's future funds rate is now below 50% in a rate cut. And I will tell you right now that unemployment data, right, is going completely against that. The unemployment data is totally against no rate cuts or one, then none, that kind of stuff. And this looks like a front running of it to me, at least the start of it. It's starting to, it's like not quite walking, talking, smelling yet, but it's like one of the 3 or 4 things, like the walking, smelling, talking, looks like, smells like, talks like the duck. It's not quite all of them yet, but it's definitely one of them at this point. Hold on one second here. I'm just getting in the office this morning. I had to, like, this morning, I went out this morning and I was like all smelly, all sweaty. Out running with my dogs and I take a shower. I was like, yeah, I got to take a shower. I'm smelling really bad. I can't wait till later in the afternoon. Dude, what do you got? 35,000 of your man buying 10 packs of calls, and how many are you buying? Like 300 packs of calls? Is that what you guys are doing? Who said 35,000? God damn. 35,000? You gonna trade your money for you, Turkey? Holy shit. That's insane. 4 months of bad trades. Holy fucking shit. My God. That's insano. Woo. God damn. That's like Nino. Gold and bonds have been telling this story for weeks. Equities refused to get on board until now. I think, didn't we say that oil was going to be the trade for this month, though? Isn't like that the normal trade for April, the oil trade? I think that's like every year. I don't think that's normal either. 520s. I bought 10 pack of 520s for 40 cents and a 10 pack for 28 cents. But I'm not going to buy shit now until we get down here. So I bought twice. So I got 20 contracts added here right at the open, then another 20 right somewhere in there. But no more buying unless we get down to this green box or this yellow box down here. No more for me. Holy shit. I got to make some money back for Turkey McNugget here. Turkey, this is what we're going to do from this point forward, brother. You ready to you want to make your $35,000 back? How about this? Just you and I will trade together. I'm going to trade with just Turkey McNugget here. Can't have Turkey McNugget. We're losing $35,000. That's insano. Pure insanity. Let's see if we can make some money. Let's make some money this morning because I'm already down right now. Hold on one second here. I had to do some adjustments here. Yeah, they're at 19 cents right now. Let's take a look and see if we can make some money together. Let's go big this morning. I think we should go big and make some money. It's probably a lot of doom out there. See if we can make a lot of money. You've lost more? Holy shit. That's fucking crazy. You know what I thought about doing this morning? So this is how crazy it was this morning. I was talking to my wife, and I'm like, this morning I was like, do I want to own the S? Because I want to buy the SPY. And I'm like, do I want to buy a 100 pack of SPY at 520? And I was like, no, I don't. I was like, do I want to buy it at 490 or 5,000? I was like, kind of, yeah. So I'm like, yeah, we can do that. But I'm like, not this morning. But I was contemplating it this morning on the opening bell. Like, that's what I was thinking about. Yeah, we're going to buy some more right now. We're going to do a trade with Turkey McNugget right now. We're going to do a trade right now. All right, Turkey McNugget, are you ready? Same strike, 520. You're trading 17 and 18 cents right now. Are you ready? We got a 100 pack lined up. We're going to try to lose some money together as a team. Hold on one second, brother. All right, 18 cents, 100 pack. Now I'm fucked up. Now I've got 130 fucking calls or something stupid. Let's see what happens here, Turkey McNugget, if you can follow all of my trades. Trade 19 cents right now. You got 140? Are you fucking insane, dude? Hold on one second, brother. Now trading 21 cents. Let's see if we can get a lift off on this. This is kind of like the deal right now. It's like, if you think about it, if Jolts is really fucking bad, if you think Jolts is really bad, we're going down anyways. If they smooth the Jolts numbers, let me move all this stuff over. Hold on a second here. Can I move this over here? If like Jolts comes out bad, dude, woof, we're gonna turn full bear. Hold on one second here, man. There we go. Is that all back up there? Where's all this crap? Why is this whole thing not going into? Hold on one second, guys. Turn that on. Trading 22 right now. Turkey, I want you to put a stop on your calls. You can hand do it right below this green box right here. So if you see price go below this box right here, this yellow box, we'll get out of the trade. We'll try to buy it down lower. I got to turn this on so we can hear the Jolts numbers here. Hold on 1 second here. U.S. Redbook year-over-year actual 5.2%. Forecast was, or the previous was 3.9%. Three minutes until we get the report.
One minute remaining. I'll lead with US Jolts job openings.
That's the one that I'm interested in. This will set the tone for the rest of the week. Hold on to your panties, Turkey McNugget. Trading 22 right now.
Ten seconds.
Trading 23.
8.7.
Oh, bullshit.
8.756 million higher than forecast. 8.73 million US factory orders month over month. 1.4%. 1.4% higher than forecast. 1%. Core durable goods revised 0.3%.
God damn.
0.3%. And durable goods revised 1.3%. 1.3% lower than forecast. 1.4%.
U.S. durable goods 1.3%. Forecast 1.4%. Durable goods revised. Actual. Oh, sorry. That same number. U.S. Jolts job openings. Actual 8.756. The forecast was 8.73 million. Now that is negative, but saying that that is negative, I'm going to expect the vol to come off on this, but Turkey McNugget, man, you might want to get out here just in case. That's bad numbers right now. Just a heads up, brother. Bad numbers. I'm still long here, by the way, Turkey. Sell the vol, baby. That's what I'm hoping for here.
Yields extend rise after U.S. data. 10-year
Jolts, bad numbers.
Basis points at 4 spots.
Forecast 8.73 million. Previous 8.86 million. U.S. factory orders month over month 1.4%. Forecast 1%. Previous minus 3.6%. Yeah, I'm still long here. I'm staying long here. I'm not going to do anything. They could take it down, though. We've got S4 and 5 down here in the daily trigger, but those numbers are dog shit. Sometimes bad is good. You know what I want? You know what I don't want to see? I don't want to see this. I don't want to see like the blast down to the daily trigger and then the bounce with the V-shaped. As long as this holds, though, I'm still good. I'm long here as long as we hold this yellow box. Trading 21 right now. 22. Come on, turn around Tuesday. $24 right now. Turkey, put in a sell order for like 32 or 35 cents, maybe 40 cents, depending upon your taste. This is the opening bell here. Right there was the opening bell. Trading 26 right now. Get no premium on this.
Spot gold hits a fresh record high of $2,273.59 per ounce.
That whole turn being erased right now to only 21 cents here. 20 cents now. Where was 9:30 tick? Right there.
Russia's gas plant Astrakhan halts gasoline and diesel output.
That's the 9:30 tick right there.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
I'm looking at the job openings rate seasonally adjusted. They're flattening right now, but still not good. Still not good numbers on jobs for February. U.S. factory orders 1.4%. Previous was minus 3.8. Let's see if I can read the report here for Jolts.
So Fed's Bowman doesn't comment on monetary policy in the speech.
Still long here. Should I buy another 100 here? Wait up for me. S4, S5. Have an order in for another 100, Turkey. Now 200, over 200 calls right now, brother. You got me throwing up my fucking neck right now. Woo! Trading 516.57. Doom and gloom, baby. Doom and gloom. S4 at 515.34. S6 at 513.46. Another 30 points. Woo. They're fucking hunting right now. I don't even want to look. I'm like, I can't believe I'm doing this right now. And that's the doozy right there. You see that one? Look at that little fucker down there. That's the daily trigger all the way down there. That's the last ad for me, man. If they blast this down, Turkey, I ain't doing anything else. So if they end up blasting this down here one more time for a V-shaped, no more buying. Fuck no, dude. I'm done. Make me want to fucking throw up my stomach right now. Oh, I gotta see something here. Is that, did we get a, we're down 1.06% on the day. We haven't had a 2% day in a long time, and I'm like, man, could we get down 2% today? You've been screaming for that for like 3 weeks now. They want a 2% down day. Haven't had a single one. This one looks like it could be. It's possible. Dude, seriously, give me some fucking premium on these fucking calls. No premium kick right now either. Zero premium kick. They didn't even have to go that high. They just don't want this to they just don't want this to come back up here in this opening bell, right? There's like not even any need for it. All they got to do is touch that 5-minute trigger. I was looking at 520 or I think 520 C's from yesterday that were ending today or something like that. They were like $4 this or last night at the close, $4.20. I was like 420. Wait, 520 or something like that. Hold on a second here. Let me look and see. They were like $5 or something like that, 4.5 or something like that yesterday. And they got burned this morning. HYG bottoming out. Still, though, still HYG looks like dog shit. It's on a triple bottom right now, but it still doesn't look good. It looks unhealthy.
Fear and greed index 79 out of
VIX looks like it wants to continue higher as well, trading 1507 right now.
96% at 15.43.
Tesla trading 165. Dixie reversing to the upside. NASDAQ with a giant fucking gap between 18,287, 18,0, so a 200-point gap on NDX. Reddit green this morning, trading 47.5. Five-minute turning up right now. 5 minutes turning up at least. That's good to see. Dixie 30-minute blooding. It's a little bump, though, in Dixie on the 1 minute. See it right here? Woof. Look at that. Woof. SPY pinned as Dixie rolls. Q's all the way down to its daily trigger. Into its buy the dip zone. SPX down below its gamma flip. Begin volatility zone right here. Doom and gloom still not down at 5123 yet. IWM on its daily trigger as well. This would be probably the biggest pullback I've seen in a single day or two in a while. TNX going up to as high as 4.376. The VIX 9-day with the back test and bounce off the daily trigger, and it still has an hourly trigger coming up underneath. So keep your eye on this cross right here. Could be an immediate reversal to the downside on price. Could see like a squeeze up and then a reversal straight back down, so be careful. Still no premium in calls, only trading 14 cents right now. Back to 17 cents. Now I need 19. I need I need more than that. I need like 30 or 40 cents. I want like $6,000 or something. Five-minute pulling up now a little bit more. A lot of danger up here in this opening price here. Trading 18 now. Dude, give me more than a fucking penny on that. I think I'm the only person. I think Turkey McNugget and I are the only people trading calls. Oh. Fuck. Fucking price is all the fuck over the place. Come on, baby. Turn around Tuesday. I think I might want to get some fucking IWM here, too. Hold on 1 second. I'm going to place another trade in IWM, too. IWM 204. 204. $212. Yeah, we have more down. We can go on IWM. Maybe not. I'm going to wait on IWM. No trade on IWM right now. I was going to put a call spread on for 204, 214, 212, somewhere in there. But I'm going to wait. I want to see if we can hit 200. Now, without a doubt, don't like this at all. Enough skin today in the game. Still long. 520C. No stops. All gas, no brakes. I'll be fucking pissed if they do this bullshit with me today again. I got caught in some shit like this yesterday. Just ping-ponging around in here. God damn, look at VIX, dude. VIX blasting off right. VIX 9-day trading 1541. Looking for a trade to 1717 right now. Turn's coming, though. We're close. You can see it right here. This is the VIX 9-day. It should be on a daily chart, though. You do not want VIX 9-day over 17 or 18 bucks. TNX rolling over finally. Dip buy on IWM. I was thinking about getting some call spreads here, but what I don't want to do is come up here and have one more blast down, and then you get your V shape to the upside. So no call spreads for me yet. I want to see if it'll get down at 200 down here. That's 202. More like down here. So still no call spreads for me on IWM. I want to take some, but not quite yet. I'm not quite ready on IWM. Shit tons of stop hunting, shit tons of fucking taking premium. I'm in a bunch of calls for today, zero dates for today on 520s. I have some other concerns here. You see right here, this is the opening bell here. And you know dealers don't want us getting over this at all. They want to fucking shut this whole day down. One minute turning, though, 5 minute turning. Upside target. 520.63 if we can get there. Right here. And we have more vol coming this whole entire week. We've got ADP employment at 9:30 in the morning tomorrow. We've got S&P U.S. Services PMI final at 9:45. ISM Services at 10. And then we've got the sketchy one. This is Jerome Powell at 12:10 p.m. tomorrow. That talk that he gives tomorrow is on my mind because I think he's going to be forced into, depending what that on that ADP unemployment or employment is cause for concern for him having to cut, being forced into cutting. Productive, this is good. Like seeing all this. This is all good so far. Nice turn. No more velocity in price. 1 minute now flattening out. 5 minute flattening out on the open. There's some kind of a trap in here for bulls. A pin. Q's with a buy on the 30-minute bar. $5.20.30. A gap left behind on Q's or on SPX, excuse me, from 523583 to 520238. fucking hate buying dips. I always tell myself that. I'm like, it fucking sucks buying dips. It's always fucking stressful as all fuck. Fucking dealers are like, I need my 4 cents, bro. Excuse me. Sorry about that. I got stress bubbles going on in my belly now. Come on, turn up. It's gonna be one of those days where it's like one of those days where I'm either gonna rip my headset off and throw them across the room. Like as this 1 minute turns up right here, if we break below it, I'll be fucking livid. Turn up. They blasted us down in the last attempt to turn up right here. Straight back down, so I don't want to see that happen again. I don't want to see this fail and we start rolling down there and bam, bam, bam to the downside. I don't think we're done going down regardless. I don't think this is the actual bottom. I think we got another day of going down minimum, if not 2, possibly into Thursday. Even if we get this relief pullback, I still think we're still not done going down here. We got Jerome tomorrow at 12:10. We've got ADP employment at 8:15 on Wednesday. Thursday, we've got initial jobless claims, another negative for the employment numbers. Then we've got U.S. non-farm payrolls on Friday at 8:30 a.m. So this could actually last into Friday morning minimum, 8:30 in the morning, something like that, this volatility. And I'll tell you what, man, like what Jerome says is going to matter. That Jerome should bring pretty big vol into the marketplace. Watch him not talk about it, but I'll tell you what, he's going to be put into a corner here if we keep getting bad reports. That unemployment shit has got it rang my bell. I looked at it again last night and I was like, you know, we actually put months ago, we snapped a line on 4%. And I'm looking at it last night and I'm like, just like we go to like 4.5%, 5%, they will run this fucking market down to, I mean, not to 0 or nothing, but you'd probably be talking about October, at least October lows. At least. You'd take that whole fucking trade right back from you. No, I don't think so. I don't think the vol lasts month of May. I just think we get range expansion. I think next month is when it gets really ugly. I'm not really on that huge lows right now. I'm still on 530 and then a big roll down to trade 550. I'm not on the doom and gloom yet. I have to see the data to be on that trade. I'm not on it right now at all. I'm on April being a good month. Still on April being a good month. We still haven't even corrected here. We're actually haven't even hit. Pullback would be the daily trigger. That's all that this is, a daily trigger pullback. Pullbacks are to the daily trigger. Corrections are to the weekly or monthly trigger. We haven't had a single one yet. As a matter of fact, we're actually only at 1% today. So we haven't had a 2% down day yet. It's like nothing's saying that, or at least price action's not saying doom and gloom at this point. You can't have a 1% down day and start claiming the market's crashing. We're trading 517.59 right now, not fucking 4,900 or 4,800 or something like that. What does Joe Dunnett say? Sell in May, go away. I don't think there's a sell in April, go away, is there? I don't think there is. It's just the sell in May, go away. Not that that's worked out at all this year either. We got no seasonal low for springtime. Still long here. I'm a little bit less stressed at the moment. Now you know about these crosses here, that there's risk in here, right? You guys all know about that. They bled it straight back down. So be aware of that. You get caught in here. You think it's going to get a nice bull cross. Oop. They're like, yeah, we're going to get a bull cross. Going to be up. Wait a minute, wrong one. Story hit red. Think you're going to get a nice bull cross in here, and then they trap you. Come up here, boom, straight down, new low, back up again, and bam to the downside. Be careful of that in here. Still risky trading in here. Still low percentage win rates for bulls in here. I.e. me, Turkey McNugget. HIG recovering a little bit, but it's also coming into its own cross right now. NDX flattening out a little bit. VIX rolling slightly. Watch Dixie here. You see this right here? Watch Dixie coming back up. This is DXY. I'm going to try to do a bull trap right here. Q's parked underneath the daily trigger. Do not want to see the daily, the hourly trigger cross the daily trigger. They'll blood this whole fucking market straight down to the depths of hell. Keep your eyes at home on, here, let me clear all this. Keep your eyes at home on this hourly trigger here, if it follows or not. This is QQQs, right? You want to watch this hourly trigger. If it follows to the downside, it's really bad. It's not following right now. It's trading sideways. But if it begins to trade down here every hour on the hour, could set up for a huge downside move on Qs. Just keep your eyes on that hourly trigger down there. This one right here. Dixie climbing again. Want to see a rejection of Dixie there. I feel like we do this every pullback, and then I make a bunch of money on one of these trades here in the bottom. I feel like today might be different. I feel like today is going to be different. Let me move that back so you can see price action. I feel like today I'm going to get taken for a ride and go to zero. Every time we have a pullback, I fucking buy this shit. I'm sweating fucking balls, and then I'm making like a bunch of money. This one feels different. This one feels like they're going to take all my money. One minute rolling back down again. This isn't good. Don't like seeing that. Q's still going down right now. SPX still kind of bloody. IWM still parked on its daily trigger. TNX rolling a little bit. VIX 9-day pushed down a little bit. Still long calls. We got another rack set up for 100, but I haven't bought them yet. Yeah, we should be cranking right now. Cranking to the upside. Woo. Mm. Daily Velo looks like shit on SPY, by the way. So it's 17 right now. That says there's more downside to go as well. Like intraday Velo is good for a squeeze, but daily Velo could go to 0. It's at plus 17. It's on a decline right now. So we're either going to get a bloodbath today or in the next day or two. Either today or in the next day or two, guaranteed. I have a meeting this morning. I actually have a meeting today at 11:30, and I just texted my buddy back, and I'm like, yeah, that ain't happening. I'm like, there ain't no way that's happening today. Fuck, they're gonna rain fucking hell down here. Q's now testing its lows. SPX testing its lows. IWM coming back down for new lows. TNX rolling over still. VIX 9-day rolling over a little bit. Dixie rolling over finally. I might actually set up that trade. That IWM trade, I wasn't going to set it up. But if they rain hell down here, we just go, we might straight red bar this down, like one big fucking red bar. And I mean like giant, straight down. But I think I want to buy call spreads on IWM if that's the case. I was going to wait until we could get it later in the week, but if we get it today, I don't think I'm going to take the trade, but I'm going to set it up. It's for May 3rd.
The US to sell $70 billion in 4-week bills on April 4th to settle on April 9th.
They're at 204 in the daily trigger. Looking for 215. It doesn't pay a ton. It only pays $395, pays you 200%. It's not really that good of a trade.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
May 13th, or excuse me, May 3rd calls are $1.70 right now. What are 208s? Those don't pay that well either. 210s? $204, 214s. I have to get above 207 by May 3rd. It's not a good trade either. I'm gonna leave it open, but I'm not getting them yet. I don't like the trade doesn't pay well enough. And I don't want to spend a fucking $1.72 on calls. I'm looking at 214Cs for May 3rd. Just fucking calls. But I only want to pay like $1.50, $1.40 or something for them. So if they do any bullshit down here, where you get like just a quick blast down, I'll buy those IWM calls. But otherwise, I want to wait for this to happen later in the week. Maybe get like if I can get like IWM at like 200 or something, 202, 200. I don't think it's quite there yet, so I'm just gonna hold off on it. And I don't like the call spreads either. They only pay right now they're 398 and they pay 602. It's not that good of a trade. Still long calls here. I want 0 to 8s for SPOOs. I would not be shocked. I'm going to say something to you. I would not be shocked for SPY to pin at the best. For us to trade this hourly trigger would not shock me. Would not shock me to. I'm going to give this trade here like a 30% chance The sideways trade in here for the entire day, 30% chance, and a 30% chance that we go straight down to hell today. And they pin us due to Jerome Powell, due to, you got pretty much equal weight all three ways here. But like if this is bottom, I'm only going to give it like a 15% chance that this is bottom. I don't think that it is. Like local bottom of the day, yeah, maybe, but bottom for the market, likely not. And we have some serious vol coming for the rest of the week. And if that shit's bad or if Jerome says anything fucked up, goodbye market. And what's scary about this too is that if he's forced into cut after cut after cut, he'll be chasing it. He'll tell you no cuts, and he'll start chasing it in like 3 months, and he'll go cut, 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 straight down to fucking zero. Still on calls here. Give me like 5 minutes. I got to make a quick phone call, and I'll be right back with you guys. I'm going to still be here in the office. I just need 5 minutes to make a call. I have to cancel a meeting because I got so much fucking money in this stupid ass trade. Give me just 5 minutes.
According to Xinhua, Xi and Biden hold phone talks.
Hey, where's my camera? What the fuck is going on with my camera? Oh, I got the office too warm. Hold on, guys. God damn it. All right, so just a heads up here. Let's take a little. Oh shit. Just want to scale out here for a minute with you because look at that doom. Looks so bad. Just to scale out with you here for a minute. So I haven't put this trade on yet. But I'm thinking about putting some size on, and we're going to talk about it right now. So we're going to look at a 4-hour chart right here. Let me go to the bottom right-hand screen. So I do want to show you something here. Okay. So I want to talk to you about something important. I think we've had this conversation. Oh, I don't know how many times we've had this conversation. Okay. All right, let's have this conversation for the 13th time, I think. We're going to count them. We're going to count the number of times. God damn it. Okay, ready? There's 1. There's 2. There's 3. There is 4. Oh, shit. There's 5. There's 6. I was just talking to a buddy of mine. There's 7. There's 8. I'll give you 2. These 2, we'll call them 1. There's 9. It's like a half of 1, so you only get 9 on that one. There's 10. We'll give you half on that one, too. So now we're at 11. And there's this one down here. We won't talk about that one. That's a proper correction, by the way. Proper correction. Get underneath the weekly trigger. Get underneath and get near that monthly trigger. Now we have risk of this actually happening here. It's kind of where we are right now, right? Right back here. And do we slip underneath the daily trigger and begin to reject it? So if your thesis trade is wrong, you get a little bit of an out here, right? A chance to get out if we slip under the daily trigger. This is always bad. There is something to be said that's negative right now on SPY. And that is the daily trigger. So I don't like this. I don't like that daily velocity is coming down. Weekly velocity is peaking right now. But we still have lots of room to go on the monthly. We're still not topped out on the quarterly. And to be honest with you, when the monthly begins to roll over and price is going higher, that's when we start to crash. The market begins to crash. So we're not there yet. Now this weekly here is like, man, this is looking pretty fucking toppy. Last time we were around there, we actually did get a correction. See it right here? See how you get that roll down and you get a peak on weekly velo, and we're kind of there, right? We're due for a correction. Not a pullback, but an actual correction on a weekly basis. So it works until it doesn't, right? Works until it doesn't. And to be honest, even if we were to trade, I don't think we're done going down, I should say. I don't think that we're done going down. I think it's highly probable that at minimum that we trade up here and come back down to this daily trigger at some point. You know, this range expansion happens. You get your 530 on the upside target, but you're still going to be buying a dip down lower to trade that 550 up here, right? So this whole zone, I don't think that we're done coming down here is my point. But even saying that, I think if we do hit the 550, Like if we have this 530 target, bam, we have the 550 target up there. Trade that, right? Come back down here, come back up here. Whatever that roll is to the downside, this is going to be a big correction. And wherever that weekly trigger is at that point, you get like this week, 1, 2, 3, 4. Get done with April, come into May. And there's that 490 that the bulls have to hold. You see it? So they have to hold this 490 for a correction. And that's like your next dip buy for the summer trade before we roll the end of summer over. This is like end of May at some point we should come down here. I'm getting my dates. I don't pay attention to this stuff over here. I'm trying to like paint a picture for you, not so much as draw it out for you. The pro traders get this stuff. Pro traders actually get the expectation for the 530, the 550, and the downside moves. They get that count from us every week. But my point here is this. Down here in this area is the time to consider putting a trade on. Something else that's bothering me here too is I want you to look at this daily trigger, how it's going up and 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 up, right? And on this pullback here, not going up anymore, is it?
Sushi and Biden had candid, in-depth
You
exchanges.
can see that it's sideways now, right? See, that's sideways right now. So we need a day or two of going up to stop that sideways action on the daily trigger for me to not have more concern that we're going to continue to roll down. Even if we close that gap and come down tomorrow, Thursday, Friday, and volatility is expected to pick up into Friday, right? If you read your market briefs, you know that volatility was supposed to start on Monday and not stop until, I believe, Friday the 5th. So there's still more volatility to the downside over here anticipated for the rest of the week. But it would behoove you, if we do not come down any further and just continue our way up, that you're considering a trade that's down the road, 1, 2, 3, 4 weeks down the road, either here with a DCA down below until it doesn't work any longer, is my point. And you can't really get to the point of we're correcting. You can't get to the point of correcting until, let me do it on a 4-hour basis. Make it cleaner. You can't really get to the point of, hey, we're going to have a correction until price gets underneath the daily trigger, makes a new low, and the hourly trigger follows, has some follow through to the downside. And then you can be like, fuck yeah, let's make a real move to the downside and trade that downside 490 or whatever that's down there. So we're still not there right now. Nothing's showing it. Although I don't think we're done going down in like a smaller time frame, next day or 2, 3 or whatever, but there's likely a big dip buy here is my point. And it's worked, 10 to 14 times, depending on how many times you count here. 10 to 14 times it has worked. So even the one time that it doesn't work, you're likely still going to be given an opportunity to get out of a spread or something like that. So when you guys always ask me, so the last time we were down here was right here. And you can actually go back and watch the video. And I did one of these same fucking videos. As a matter of fact, when we're down here, I do these videos just like I do this exact segment. And I say, until it breaks, you keep trading it, right? So you can actually go back on these lows, and I'll actually do a segment and say, yeah, we're buying the dip here. We're going up. So until it breaks, you don't stop it, is my point. So just for right now, if you're all bared up, like if I'm getting you bared up or I'm like, hey, this might not work this time or something like that, you should be preparing for another dip buy. Why? Because it's worked so many times at this point. So many times that you're a dip buyer here, right? This is still a pullback. These are not corrections, right? Not a correction, 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 not a correction. Now, this is a correction. Anytime we get down here to this weekly trigger, anytime we get down here to this monthly trigger, that's a fucking correction, right? That's some vicious shit down there. I mean, you see shit like that, that's a beautiful thing, right? Let's measure what that is right now so you can see what that price action looks like. Talking from peak to trough, or from here to here, is 6.5%. That's a big move. We haven't had one of these, have we? There's been no 6% moves anywhere in here. And then you got down here's another 7 or 8%, right? Right down there. So that's like, this is 9.5%. That's 6%. We're down 1% right now, 1%. That's all we're down, 1%. So we haven't corrected, have we? There's no factually we have not corrected, have we? Just say it with me. We have not corrected, Captain. Say it. There has been no correction. So is this number 11? Is my point to you. Is this number 11 where we're going to have just another one? Where we get to buy another one or not? Right? Big question on that, right? Is this number 11 dip buy? And remember, people that tell you that they missed the run, it's because they never bought these things. They got scared. Or they bought the top of the run. Or they bought the half of the run and all that kind of stuff. And I'm in here trying to buy dips right now. I'm sweating my ass off buying dips right now. And it's scary. It doesn't feel good buying. I think I even said this the last time. It doesn't feel good buying these dips down here. It feels awful. And you're putting size on, and you're increasing size. You're like, here's a few $100. Yeah, here's a couple $1,000. Here's another grand. And then here's 10 grand. Here's 20 grand. And it doesn't feel good to do it. It feels horrible. It's like one of the worst feelings in the world. So anyways, just keep your eyes on this. Also note that if we do correct, when we do correct, right? This is a key point here. When you are buying these dips, right? Let's say we do roll over and begin to correct. 90% of the time, you're still given another moment for a rejection for the true correction. So you're given a way to orderly exit this trade. Now, I don't think we're ready for the dip buy here, but I would fucking love to, next 2 days, 3 days, do one more blast down, get back above, and take that fucking trade to the upside. You get what I'm saying? And now let's say we roll it down. Let's say take the trade with size, 20, 30 grand or whatever, and we blast down. There's still going to be an opportunity for me to get out of the trade if it goes against me. If this dip buy turns into a correction, there's an orderly exit so I don't fucking blow up my account or anything. You get what I'm saying? So start to think about this stuff today, tomorrow, Thursday, and Friday. Now, I will warn you of something here. This is a warning to you that I have to give you. You're probably out there drinking the Kool-Aid, and I wrote you a letter last night that said, hey, there's real danger here due to unemployment. Even though you're aware of that stuff, you must be a dip buyer to make money. Point blank, this market goes up and to the right for all eternity. Let me say that one more time to you. This market goes up and to the right for all of eternity. It always has. It's never come back. We've never reversed it. It's always gone up. So these are the moments where you have to decide, hey, I'm really fucking scared. I'm going to get rolled. And if I do get rolled, how do I manage that trade and all that kind of stuff, right? How do I manage when we do get a roll, when we do get a correction, or if it is the top? How do I manage that trade? We've already gone over that in the show when we do correct or we crash, what to be doing, right? You guys already know if we're going to crash or if we're going to correct, what you should be doing to manage your trades. But I will warn you of something. When people are out there and they're like, I missed the entire NVDA run, or I missed the entire run from October, it's because of where we are right now, right? The danger, the fear, the risk. But you have to just manage that position as best as possible. So anyways, I need to give you that update right now because we're in where? Where are we? We're in the dip buying zone. And this is where you make a lot of fucking money, a whole fuck ton of money. So when you see me trying to buy a dip right now, I don't want you to be like, I don't want you to be watching me and being like, he's crazy. Guy's out of his fucking mind. This is the place where you buy a goddamn dip. You can go fuck yourself. I got the facts right in front of me. And there's always someone at every one of these out there in your ear saying to you, but this time it's different, Cappy. It's going to roll. This time it's different, Cappy. What if this is the time, Cappy? 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 It can be, but you can still manage that trade if it is my point. You can still manage the trade. So let's talk about managing this trade. We're going to look at a couple things here. So if you want to play it safe, you always wait to get above the hourly trigger. There's the hourly trigger right there. You can wait for price action to show you the way and be like, I'm not getting crazier, Cap. Right? Come right back down here and you're above the hourly trigger, and then you're just taking part of that trade. This is the safest part of these trades right here. The other thing that you can wait for is, let's say we go up here and fail, and we actually do slam into the daily trigger. This is another nice place to take that trade. The hourly trigger comes down even lower, and your real trade was right here, right? You're back above it again, you're clean and in the money, and you're rock and roll to the upside. So you've got like three options. Put risk on down here, get risky, wait until we're above the hourly trigger up here, or wait for more blood down below to get above the hourly trigger here. Or you put the risk on, right? You're like, oh shit, we're doing this right now. And I'll be honest with you, I'm not executing that IWM spread right now because I do think there's a possibility of us rolling back down one more time. It's like right up here, reject, come back down. That's the actual dip buy to buy IWM. IWM's trading $200, and I'm buying that. Now, let's say I'm wrong. I missed the size trade in IWM. This is SPY, I know, but let's say I missed the trade, and price goes right above, bam, 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 comes right back down, slams in. I'm going to take my IWM trade there with size. And that was our bottom for the 13th, 14th, or 15th time. Now, I know you also want to say to yourself, well, Cap, last time we had this talk, I thought it was going to roll, and it didn't, right? And you have to play the game is the point. You have to play the game until it stops. I'm gonna show you why right now. I'm gonna explain to you why. I did this the last time we did this. And I'm going to show you why you have to play the game to the end. There's an important lesson here. This is a very important lesson here. I'm going to show it to you. When you don't play the game, this is what happens. See that bottom down there? We started to turn around, right? And I drank the Kool-Aid here and thought it was more of this. I raised so many puts, so much big fuck tons of money in here. I should have went long. Now I did eventually get long, right? And kept going up here, made a bunch of money. But the point that I'm making to you is, you see that run right there? And that run went on and 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 on. And I want to show you a scarier one. This is the one that I really want to show you. If we are in a blow-off top, gotta go slow with this. Are we on the daily? Let me go to the daily. If we are in a blow-off top, let me show you what it looks like. So I told you in 1998 and 9 and 2000, right? You're on the ride. You're on the train until it stops. You get what I'm saying? And I want you to see something else that's key here when you're on that train. When you're on that train, the monthly trigger is not breaking, is it? See how it's holding? Can you imagine being on this train right here? This train stops for nobody. Watch that train continue higher. Stays above the weekly trigger. Even when it blasts down here, right, in September of 1998, it still held the monthly. That is still a correction. Let me show you the size difference here. You tell me something. That's a 21% correction. 21%. Peak to trough. Guess how much higher it went? Another 40% up to the top. It's just, it's maddening. So we're talking about 1% right now. A 1% down move right now, right? And we're talking about even if it rolls down into the weekly or monthly, as long as that holds. Imagine this, if I was here with you on stream and I go, oh shit, we're correcting. Oh shit, we're correcting, right? Uh-oh, we're going to correct. How bad is the correction going to be? And I told you, here, let me go back to one of these charts again. Sorry about that. Hold on. If we go back here, look at this right here. Why can't I go over there? What am I doing wrong here? Let's say today I said to you this. Let's say today I said to you, okay, we've confirmed a correction. And I say to you, we're about to roll over and correct 16%. But you should stay long because we're going to go up 30% to 6,000. Would you believe me? Would you be like, what do you mean we're going to go up to 6,000 still? Cap, we're crashing. And I say, no, we're not crashing. Just a correction down here. We're actually going way up there. Just hold SPY. Oh, and don't forget the DCA down there because we're going to 6,000 up there. You'd be like, you're out of your fucking mind. You'd be like, you're crazy. And I just showed you an example of it in an actual blow off top. So what is your game plan here? How do you trade this? I'm going to tell you exactly how you trade it. Again, for the second or third time or whatever, how many times I've said it to you. This ride does not stop for anybody, is my point. This ride does not stop. It does not stop. It won't stop. It can't stop. And it's not going to. When you see a move like this, like we just took, this is the start of a blow-off top. This isn't the beginning or the end of a blow-off top. This ain't shit. We can compress 2-3 months, or excuse me, 2-3 years between like 95 and 98 into like a year. I shit you not. Like 99, like the early 90s, 95, 96, 1 year. We're doing it right now. We're right here. We're doing it right here. And we did it back here too, right? Here's the turn. Big correction, big move up. During this correction in October, how many people were saying we're going to roll down there? We didn't. When we came back, remember we came back up here? Remember this shit? Remember we came up here, and what did the Bears want? We got the bounce, didn't we? We didn't get the roll, did we? Remember all that shit that was on FinTwit and whatever? That's not what happened. We fucking rocketed to the top. So even if we do correct, why is that? Because we're blowing off top. We got so much fucking room to go. It's not even funny. 6,000 price target minimum, possibly 9 or 12,000. So just think about that when we're over here and you're all doom and glooming it up and saying, fuck you, Cap, this is it. We're going down. History is saying no, that you play the game until we're done.
She says China-US relations show signs of stabilization.
Does that make sense? So while I'm trying to buy a dip down here, hold on, let me go over here. I'm trying to buy a goddamn dip down here. And I'm scared shitless. Don't get me wrong, it sucks buying a dip. It sucks buying the dip every time you're fucking down here. Everybody's in your ear telling you crash, 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 crash. Correction, correction. We can correct. We'll see it before it happens. We're kind of due for one. The weekly triggers or the weekly velocity is like, yeah, we're pretty close. Daily velocity is saying the same thing. Daily velocity at a minimum is saying we're not done going down. Wherever the fuck we're going right now, probably going to reject that hourly trigger and head back down and at least slam into that daily trigger.
Risk with financial juice.
But there ain't there ain't shit out there saying crash yet. And there ain't no price action saying crash yet. We're not even in a correction yet. We haven't even confirmed a correction yet. And 13 times it has worked to start scaling into a pullback for big time gains. Now I agree. I'm scared shitless. Of all the other times that you buy a dip down here, this is the one that's got me scared. I'm scared. But I'll tell you what, if we keep going up and we trade 6,000, do you remember that person? Remember that bear that we had in our chat? We had a bear in our chat that said to me, Cap, I don't care if 3,500 is the bottom. We will be back here, and I will get another chance. And I went over this for weeks. I was like, no, you're getting it wrong. You buy 3,500 with like 10 to 30% of your account. You buy more. You just keep adding and adding and adding, and you save like 10 or 30% in case we actually do trade 3,200 or 2,800 for that last bit of ammo. So my only point here is that the only point I'm trying to make to you here is that you have to get on the train until the train no longer goes. It's a hard concept to teach because it sucks. It's dangerous. It's scary. It's all kinds of crazy. And I get it. I understand the stress that it causes people. It's causing me stress. Even right now, at this moment, I'm under stress right now. So be aware of a few things right now. Now, I went over this in the market brief last night, and I want to tell you a couple things. If you didn't get the market brief last night or you didn't read it or whatever, it's a few things you need to know. First of all, we do have real danger in the market. It is unemployment. It is nothing else. It is not rates. It is not fucking gold or fucking Bitcoin or fucking anything. It's unemployment. It is the biggest danger right now to this market, to have a significant move to the downside. It is something that the Fed can't fuck with. If we get a ramp in unemployment, forget a correction. They're going to run this shit down to the fucking sewers. Saying that, you need to know that. Just be aware of it. You want to pay attention to anything to do with jobs, employment, unemployment, fucking wage spiral, you name it, any of that shit. And anything around jobs. I saw a guy last night. I subscribed to a newsletter, and the guy sent me something about commercial real estate. I'm like, it ain't that either. It ain't fucking commercial real estate. It's real estate to an extent. It'll happen with real estate. It'll be blamed on it. But I'm telling you, it's always fucking unemployment and inflation. Every goddamn time. The 10s and 2s, 10s and 3s, 2s and 10s, 3s and 10s, the Technique 4200s, whatever they're called, Tech 1200s. You know what DJ spin tables are, the old school ones. They matter only when those other things matter. That's when it really matters. And there are bond boys out there that know this. They know about this stuff. They want to front run it when it happens. So you have to be aware of it. So here's the second part of this. I don't think we're done going down here. I think we are going to slam into the daily trigger. Daily velocity is saying expect more down to come. We're at plus 17 right now at a minimum. I'm looking for 0 or negative 25 or negative 50. That would be a correction on daily velocity. So I'm still wary here. I'm not convinced this is the bottom in any way, shape, or form. I do expect another roll down this week. But saying that, if we get above that goddamn hourly trigger, I'm going to take a size trade. if we don't get above the hourly trigger and we slam on that daily trigger, I'm going to take a trade for size. And this is before it happens, right? You guys are always asking me for before. And I do this, and then I get told I don't do this with you, but I do it. Every fucking time I do it with you. So my point here is this. Expect a retrace here, probably the hourly trigger. Expect another move down to at least the daily trigger, unless we can backtest the hourly trigger. And we are due for some kind of a correction. And the biggest threat to you right now is unemployment, period. Nothing else. There ain't shit out there that's more. And the reason is because it forces the Fed to do things. They don't have a choice at that point, right? You start getting unemployment ramping vertical like it is right now, and it gets above 4%. Historically, we roll this fucking market down in a big way. And they chase that, and they're forced to cut.
And according to a survey, OPEC oil output steady as the group's latest cutback stall.
Okay. Yeah, he will have no choice. No matter what we say, no matter what we want, no matter what we think is going to happen, he'll watch that fucking market crash, and he'll be chasing the entire fucking way. Entire fucking way. He'll have no fucking choice. No matter what he says to you, no matter what bullshit story he tells you, he ain't shit. He'll be walking out on that stage going zero fucking rates. Fucking zero. And you'll be once again saying to yourself, ah, shit, they did it again to me. They told me sweet nothings. They rolled the market down on me. I was long. And they didn't cut rates. And sure than shit as we're cratering. We're trading fucking 3,800 or something insane. 4,100. And you're going, shit. I was late. All right, we got Fed Williams speaking. We got the 42-day bill auction that already took place at 11:30. We've got Fed Williams speaking. Fed Williams speaks at 12. Fed's Mester speaks at 12:05. Daly speaks at 1:30. Shocker, right? These guys are going to craft a fucking story for you. You're going to get a story from these guys. You're going to get a story from Jerome and all these little Fed chairs because they know where they're at. They know that they can't, these guys know right now that unemployment is the danger. That is the only danger. Fuck rates, fuck all, or not rates, but fuck yields and all that other shit. It means nothing. Only thing that means anything right now is what the Fed does. And to be honest, in my viewpoint right here, there's only two options for them. You got two options. Fake that fucking unemployment number or cut rates in June. That's it. Or chase. I guess they would chase. So if they don't cut rates, so if they don't fudge the unemployment numbers and they start to go up and up and up and up, and they tell you in June, fuck you, we're not cutting rates, I guarantee you this market will roll the fuck down, and they will be forced into cutting rates. They will not have a choice. I know, Jimmy. I know, Jimmy. I know we disagree on this. And when he doesn't, and that unemployment rate starts hitting 5, 6, 7%, this fucking market's going to be in the shithole.
Development, right?
What if they don't fudge them? They don't go up and up and up and up. They've been fudging them. You can see it. You like all the what ifs and what abouts and could be's and shouldn'ts and all that stuff. They've been fudging them. They've already been done. We can see it. You can see it in the data every month. All the data is going sideways, slightly up, slightly down, slightly up, slightly down. Why? You know why? The more they do that, the more stable the market is. The moment they lose control of velocity of inflation and unemployment, the Fed and the Treasury Department loses control of the market. Every single time in history. It's every single time in history. Yeah, I show it to you guys all the time on the chart. You can actually see it. You can actually look at the unemployment, inflation, and they just every month it's like up a fucking tick, down a fucking tick. Up a fucking tick, down a fucking tick. Up a fucking tick, down a fucking tick. I'm telling you, it's every time. You can look at this shit all the way back to the beginning of the Stone Age. 1894. Same bullshit every time. Same bullshit every time. Look at it's all parked sideways too. These assholes. Fucking trading us sideways. Burning calls. So anyways, that's all I got for you on this stuff right here. Oh yeah, I'm still in calls, dude. I ain't selling. These fuckers are staying on at the end of the day. I'm ready to go in big. I'm getting pretty bullish here. Are you bearish or bullish? I'm getting like bullish, like 2 grand, 10 grand, 40 grand, fucking 30 grand. This is my time to make some money, so this is my pullback right here. Yeah, this ain't no thesis. Been talking about this since day one. It's worked every time. not one time, every time. Every single fucking time. Every single fucking time. Yeah, I can believe that too. If you read enough books about the Fed, they fudge that shit all the time. There's plenty of books. There's like hundreds of books out there of them doing this shit. It's like it's the norm. It's the norm for their decision making. It's the norm of all of it. Sell the fucking rips. Yeah. No, it's 100% of the time. Not sometimes, every single time. What do you mean it didn't work in 2022? What are you talking about? It didn't work in 2022. No, it did work. We reversed immediately. They cut rates to fucking 0. We're at the bottom. Well, we had one more quick leg down, but that was just for the bottom. The V-shaped. Works every single time. Every single time. You can look at it yourself. Do you guys want to make your own chart so you can look back on this stuff? It's like every single fucking time. It's like clockwork. Nothing's changed for the Fed. Nothing's changed for the Treasury Department. Nothing's changed since 1970 fucking 8. None of it's changed. None of it's changed, dudes. None of this stuff. It's the same fucking book, same MMT, same bullshit since day one. They've been doing this shit for too long. They got like one fucking playbook. One playbook that they that's like one playbook for the fucking Fed and the fucking Treasury Department every fucking time. $204, $214, but I want 200 if I can get it. So the trade's not on yet. I want to see 200 if I can get it. I want to see 200. I want to see like a capitulation move down and then take the trade. Make sure that it's not dated past May 3rd. I think mostly because I don't like that sell in May shit. I'm suspect of that sell May shit. Like that May bloodbath and then the slow grind in summertime and then the doom and gloom for the election. The only real problem I got here is unemployment. That's it. It's the only thing that's got my ass. If you any guys out there saying that we're gonna crash for any other reason, I got nothing for you. I laugh at all that. It's always unemployment. Every fucking time. Don't care about debt. Print more money. Print more. Fuck you. Pay $30,000 for your rent. I don't give a fuck. You want me to talk to you like they are in the back room? I'll talk to you right now. You ready? Fuck you. You're going to pay $10,000 for your apartment. Fuck you. You're going to work 20 fucking years until your pay equals that $10,000 apartment. You're finally going to get above the rate of inflation in about 20 years as a young person, and you're going to have a sweet spot for like 5 years, and then they're going to fuck you again until it doesn't work anymore. They are assholes. They're scum of the earth. It's a cult, man. The MMT cult is a scam. And they will run it and 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 run it. And when they break it, they'll keep running it. Every single time. They've been doing it since 1978. It is now what year? 24. Jesus. 22 plus 24 years, right? 46 years. And this time it's different. No, sorry. You need like an exogenous event. You'd need something bigger than COVID. You need like World War fucking 3. Something like that. Outside of that, you ain't getting shit. Same shit over and over again. Trying to tell me on a fucking stream that they're going to change their mind or this time it didn't work. 46 fucking years of this. 46 years of bullshit. Yeah, that's true. That is true. 46 years of scam by the Fed and the Treasury Department. It's disgusting. 46 fucking years. All right, I'll be right back with you guys. I got to take a quick break again. Appreciate you being with me here with me this morning. By the way, you're going to get updated charts today. Before the close, I'll have some charts up for you on the supporter level, and it'll include charts for pro traders so that these would normally just be for pro trader, but you're going to get them for supporter as well today. What else? I'll be back in 5 minutes or 10 minutes. I got to make another quick call. I had a meeting today at 11:30, and I had to skip out on it because I'm sitting fucking long in a bunch of calls on zero dates. I haven't taken this many zero dates in a while. It's been a while. So I'll be back with you guys just a little bit. If I close them out or anything like that, I'll let you know. If we start to bleed down or something like that or go crazy, I'll say something. Yeah, I'm with you on that. It's unemployment, dudes. I'm telling you. If he fucking sits there, if this unemployment rate starts to race up, mark my words here. Bork, if you're out there, make a marker. Any of you mods that know how to make a marker right now. I'm going to warn you guys of something that's very fucking serious. Make a marker right here. If this unemployment rate starts racing up, right, and you hear Jerome Powell out there telling you ain't getting a fucking rate cut or something like that, I guarantee you 100%. This fucking market crashes, and that motherfucker is going to be forced to cut rates to zero. Save this clip. I'll come back and show it to you every single time. Every single fucking time. All right, I'll be right back. Give me just give me like 5 minutes, 10 minutes. I'll be right back with you guys.
At 12 p.m. Eastern Time, we expect comments from Fed's Williams, who moderates a discussion at the Economic Club of New York with Jeremy Siegel, a professor of finance at the Wharton School of University of Pennsylvania. There's no text, but a Q&A from Williams is expected. We also expect comments at 12:05 p.m. from Fed's Mester, who gives remarks on the economic outlook at the Cleveland Association for Business Economics and Team NEO Luncheon. Text and Q&A are expected. Shortly expecting comments from Feds Williams.
In 5 minutes' time at 12:05 p.m. Eastern, we expect comments from Fed's Mester. They are giving remarks on the economic outlook at the Cleveland Association for Business Economics and Team NEO Luncheon. There is text expected as well as a Q&A.
Bought another 100 calls. SPY 520.
1 minute remaining. Ten seconds. Fed's Mester still expects Fed can cut rates later this year. And Mester says the Fed can cut rates gradually if the economy meets expectations, and also doesn't see case to cut rates at the next Fed meeting. Does not expect smooth path back to 2%, and expects more inflation moderation at a slower pace. And Fed's Mester says strong economy gives Fed space to take stock before cutting rates. And the bigger risk to policy is Fed cuts rates too soon. And risks to economic outlook have become more balanced. Fed's Mester also adds, sees labour market in better balance, expects higher unemployment rates. And Mester revised up growth view, activity now seen just above 2% this year. And Mester now sees longer run funds rate at 3% versus prior 2.5%.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Be careful here. Dixie is on its move on the move higher right now. Some real danger for a downside move. Watch out over here. Be scared, baby. They're going to try to send this shit down to the dumpster again today. Be really scared. We really sketched out here of a big downside move. First target is 515.50. I'll put up the things for you guys. Right there. 2 targets to the downside.
we have posted out a piece by Fitch on global contagion risk growing from rising CRE losses for all those interested. Fed's Mester says is seeing some slowing in the economy, but it's still rebalancing.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Fed's Mester says disinflation can happen despite the economic strength. Mester says a strong economy doesn't mean disinflation will stall.
To learn more.
Welcome back to Squawk on the Street. Take a look at Tesla shares.
Excited about right now. And I think this is a good reminder, don't fall in love with stocks because they'll break your heart.
You
And
buy
Mester
more if
says
the stock
doesn't
continues to
think neutral
slide.
rates
I
will
said
be
it's
as low
having a
as it
terrible
was.
start to the year. It's down more than 30%.
I like to sell calls. So half my position got called away at 220, which was, it went much higher than that. So that's my discipline. I'm going to see if it settles in here at 160. What I think I'm going to do is wait till after earnings, let the analysts bring their numbers down. But really, I want to see an innovation catalyst. And I have a Tesla. I use the full self-driving, but 95% self-driving and 100%, you can drive a truck through that. So I think it's going to be a rough year for Tesla. So I would wait probably a couple quarters before I look to add to the position.
You guys want to talk some CVS, United Health, and Humana? You guys, Jim and Surratt, are attached at the hip on these stocks. At least as CVS and United Health
I'm in
go.
a bad mood.
You should be, because United Health is one of the biggest drags, if not the biggest, at least for the Dow. I think that alone has got a couple hundred points peeled off of the average. What do you want to do with this? This is related to Medicare and Medicaid services and their rates.
Yeah, I mean, the companies haven't come out yet to say how much is going to affect them because it is still a small piece of it, but the overall sentiment is so negative on these stocks. So as a long-term value investor, it's hard for me to sell at this point, but it is definitely in the reassessment camp.
Okay. For just United Health, what about CVS?
Both. And CVS...
Reassessment?
CVS is an operational assessment in the sense that it was a turnaround story, that they were going to actually get better margins on how their business is run. United Health is a very well-run business. The question is, how much is this going to affect their earnings going forward?
Are you telling me you're reassessing the place of both of these stocks in your book?
Yes.
That's what you said. Okay. What about you?
I'm not going to sell. Okay, and it's not me being stubborn, and I know sometimes I have a stubborn streak, folks. I do the numbers. You know how I do this, okay? The health insurance business of CVS, I'm just going to focus on that, is 1/3 of their operating income. Within that, 40% is Medicare. So you can do the math. We're talking about 15% of their operating income is Medicare, where the payments from the government are going to be 1%. Let me say that again, 1% less than expected, okay? That does not merit, when you do the math, that does not merit a 9% decline. However, to Surratt's point, the sentiment on these stocks is terrible. It's a shoot first, ask questions later type of environment. That is not the sort of thing I'm going to sell into. The company will report earnings in 2.5 weeks. I will look to hear what they say then. And you know what I expect them to say, Surratt? Is they're going to cut costs and they're going to deny a lot of claims, because that's what insurance companies do.
You're not tired of CVS?
I am tired of it, Scott. That's why I'm like, my dentist is tired of it, because I'm gritting my teeth so much. So, yes, I'm tired
of asking you about it.
I'm sorry. I'm sorry, because look, I mean, I could do this analysis like I just did, folks, all day long, and I can tell you to buy, and the stock market doesn't agree with me, and sometimes that happens, and it's incredibly frustrating.
Maybe sometimes the stock market wins, right?
Yeah. Anything else?
No. Pippa Stevens has the headlines for us. Hi, Pippa.
Hey, Scott. North Korea fired a suspected ballistic missile into the sea Tuesday. The launch most likely followed up on a North Korean test in March of a solid fuel engine built for a new intermediate-range hypersonic missile. Experts say if the country succeeds, the weapons could reach the U.S. Pacific military hub of Guam and beyond. Arizona could be the next state to vote on a measure to protect abortion rights. Reproductive rights groups say they have secured the needed signatures to put the constitutional amendment on Arizona's November ballot. Ohio passed a similar measure last year, and New York, Florida, and Maryland voters will decide on proposals to expand or protect abortion rights this November. And a tugboat pulling a fuel barge traveled through a temporary channel, bypassing the Key Bridge wreckage in Baltimore. It came just under a week after the bridge collapsed, shutting down marine traffic in the port of Baltimore. Officials say a second channel that can support deeper vessels is currently under construction. Scott, back to you.
All right, Pippa, I appreciate that. Pippa Stevens. Up next, the hot streak for commodities. Gold hitting another record. We told you about that. Oil prices at a 5-month high. We told you about that. We'll find out now how the committee's playing the space. Do it next.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Stocks and bonds dropped around the world as solid economic readings and a rally in commodities spurred speculation that major central banks will keep rates higher for longer. NBC.
Welcome back. We do have some breaking news regarding a deal, and a very interesting one at that, one that David Faber has been reporting on this whole time. Now we have some finality, I think, David, right?
We do. Endeavor, of course, the large multifaceted firm, of course, with its control ownership of TKO, the combination of UFC, which you know well, Scott, and World Wrestling, is going to be going private. Now, this is not a surprise, except in the timing, because, frankly, many investors in Endeavor had anticipated that the company would, in fact, be taken private some time back by its control shareholder, Silver Lake, the large private equity firm, which said it was looking at doing a deal many months ago. In the intervening time, the stock has sort of traded in a range, let's call it in the 20s or so. Originally, an expectation had been, and a hope had been, that perhaps a go-private price would be 30 or more. That is not the case. $27.50 a share in cash. That still says, they say, represents a 55% premium to the unaffected price of $17.72. That was back in late October again, when there was frustration on the part of Endeavor's management, led by Ari Emanuel and Mark Shapiro, at the share price, that then was soon followed by at least the talk of a potential take private by Silver Lake and some language to that effect. But Scott, we've been waiting for quite some time for the actual deal. There was a question about, well, is the financing taking longer? It's a large equity check, given the $13+ billion in equity value we're talking about here. And so Silver Lake seemingly took its time to line up the appropriate investors to back the equity side of the transaction, including, of course, the debt side. You also will be seeing here the rolling in of ownership stakes of Mr. Emanuel and Mr. Shapiro as well. I'm checking some of the language here to make sure that is still the case, but I'm fairly certain that, in fact, it is. And, you know, we'll have to wait and see how happy or not shareholders are.
Yeah, it's halted right now, so we'll get a quick look when it opens.
Exactly. In terms of the performance of the special committee here, which obviously negotiated on their behalf. Kind of a tricky situation where when you're negotiating,
Fed's
when
Mester
your
says fewer
CEO
job
and your
openings have
president are
been key
rolling
to
in
rebalancing the job market.
to a deal, and so potentially want a low price because that's where they get marked. And at the same time, obviously, your control shareholder is the only one that can make an offer for you. It's not like there could have been other offers potentially made here if Silver Lake was unwilling, as it was, to sell its own stake.
All right. Can I pivot you while I have you to Disney?
Sure.
Since that's coming to a head. And, you know, the reports, including your own, would suggest there's a reasonably high level of Disney confidence, should I say, in the outcome, though that could obviously change. But what do we know now?
Yeah, I mean, we're still waiting for, obviously, the final tally. We should know something perhaps as soon as tomorrow morning, even though the annual meeting won't start until 1 o'clock Eastern time. Scott, from what I'm hearing right now, and again, I always want to caveat that, it does appear that Disney is certainly in a very good position to prevail here. Are they going to do so on some sort of crazy ratio of 70-30? No way. When you had ISS, the influential proxy advisory firm, go in favor at least of Nelson Peltz joining the board, that already made it much closer, perhaps, than might have been anticipated. But will they get something into the high 50s in terms of an overall percentage of votes in their favor? I think that is a possibility right now from what I'm hearing. Again, we are still waiting to hear from, at least officially, from some of the larger firms. But again, Scott, from what I'm hearing right now, it does appear that Disney is likely to prevail, and Mr. Peltz and Mr. Razula will not be joining the company's board. That said, votes can change right up until the last minute. We want to make sure that that is part of anything we're sure to sharing.
Does the closeness of the vote in the end matter at all to what transpires next in terms of the way that, you know, Bob Iger leads this company forward? If it's much closer than we thought, if it's just a hair win, does that matter?
You know, if it's just a hair, it might matter in the sense of they certainly would have to think, well, we had an awful lot of shareholders who were unhappy in certain areas. That said, I'm not sure that that's going to be the case. And given the emotion on both sides here, I don't really think that Disney, regardless, as long as it prevails, would do anything differently than it is. They've said that they are very much focused on succession, which has certainly been a key point that Mr. Peltz has been making. It's something that the Disney board, he says, and many agree with him, failed at the last time around. On execution, they say we're doing it. On cost cuts, we're doing it. So the argument has been, yeah, everything you say you want us to do, we're doing. Why do we need you?
And
it would appear, at least at this point, that Disney is in a position to prevail on that,
for the price of 1 month.
Yeah, I mean, I've got a couple of shareholders here. Jim, you've said you're on Team Peltz, but even if he loses, you're not selling.
Yeah, I think that's the clearest point I want to make is I'm definitely not selling if Peltz doesn't get on. My feeling about it is that he can't hurt. You know, just to what you were saying, I think if it turns out that Disney prevails, I don't think there will be an olive branch extended by Mr. Iger to Mr. Peltz. Just seems like there's been too much blood spilt on this. But, you know, for guys like Surratt and me, we go...
What the fuck is with Mester?
You know, if we're really 6 months away or less from profitability in Disney Plus, this is where the future of the business lies.
Dude, what is with Mester? Mester needs to shut her hole. Dude, everything that she's saying right now, I'm like, what does she want? Crash? Does she want a market crash? Are you guys watching Mester's comments right now? fucking hawk. And she used to be like middle of the road back in the day. She's like super fucking hawk right now. She needs to pipe the fuck down. She used to be like middle of the road-ish, kind of hawkish. She's like fucking fuck the economy. Are you seeing her comments right now? Hold on, I'll be right back.
Fed's Mester says policy more effective when the Fed and market views are aligned.
Just heads up, if you are in calls, make sure that you have a price target for your calls. There's a couple different places. First one right here where this yellow bar is. Second price target is above. I don't think they're going to let us get above this. This is the 9 a.m. or the 9:30 open. That's why I put that yellow bar there. Dealers don't like to reverse. Such a bloodbath day, right? Try to buy the dip on the open, and they're like, "Fuck you! You're not going to make any money." But there's PT1 right there. We just hit it, and then PT2 is going to be right here. You might want to put, my point here to you is, even if we do go up here, you want to decide what you want to get paid for your calls if you're in zero dates, at least. Just like yesterday, where we blasted up, and I think we went from, yesterday I was adding, and we went all the way to 80 cents, but I didn't catch the 80 cents. It was like 78 or 80 cents. I only caught like 60 cents and like 55 or 50 or some shit like that. Just be aware of it. If we do start squeezing, have a number that you're comfortable with taking on any kind of a squeeze if we go straight to the moon, so that you're not trying to chase price. I ended up chasing price yesterday, and should have had a sell-in low enough, or high enough, excuse me, to account for that like squeeze and then roll over.
All right, welcome back. We kick off a new quarter. We take a look back at the one that just ended for winners and losers from the investment committee. So, Brand, I'm going to start with you. We're not going to do NVIDIA because we've obviously done that. We're not going to do Tesla either, which was the big laggard, as we all know. Yeah. Bitcoin, Grayscale Bitcoin up 71%. Ethereum up 34%. Grayscale. You want to talk to me about where you think crypto's going now?
I wish I knew. You know, I could see it going to 100,000, and I could see it going to 20,000.
Fed's Mester says the average family is still struggling with inflation. Explains sour consumer mood.
Are interested in it, but my one thing is I still don't understand the use cases for it. So I'll keep it small and leave it there.
What do you want to do with Roblox, for example, down 11% in the quarter, BHP down 15%?
So Roblox has been trading between 30 and 40 very consistently. So if you're a trader, but wait till it goes to 30, sell it at 40. I don't think Roblox is going to get meaningfully over 40 until they're earnings positive or they get bought out. And so we'll see what happens when it gets above 40, what I do. I think it's a long-term winner if they can go earnings positive.
Surat, I look at your American Tower down about 10% in the quarter. I've told you're buying more. You're adding to that?
I like how you go to like the buy loser. You don't even go to any of my winners.
Well, because it's actually actionable, because you're actually adding to it.
It is actionable. It is. I am adding to it. I think given where they are, if you look at the secular growth in towers, this is the place you want to be. They are down for the year because of the interest rate trade. But I think the business itself is so strong that even if rates don't come back down, you can make money in the stock.
You want some Uber love? It's up 32%. Meta's up 40%. XPO's up 44%.
44%. So Uber and Meta, you know, I've been trimming this quarter, just taking money off the table. XPO is now also starting to trim. It's just had such a great run. So just deploying it into things like American Tower, Raytheon, which was a new buy also for us. So looking at other areas that we're buying there.
All right, good stuff. We'll take a break and we'll do final trades next.
Don't forget that we've got Fed's Daily speaking at 1:30. At 4:30 in the afternoon, we've got API, crude oil stock change. And then tomorrow, just a heads up for tomorrow. Heads up for tomorrow, we've got ADP in the morning at 8:15. We've got Bowman speaking. We've got PMI, S&P Global Composite and Services PMI final. The big one, though, of course, is going to be ISM Services PMI. That's at 10 a.m. Tomorrow. So a bunch of stuff going on in the morning tomorrow. And then don't forget at 12:10, we've got Jerome Powell speaking. Now, there was one comment from this statement earlier from Mester that piqued my interest. She had said, let me see if I can see what she wrote here.
We have a big show coming your way tomorrow. Halftime's going to be live from the Sona Investment Conference in New York.
You said, I see the labor market in a better balance. Expects a higher unemployment. Sorry.
Eastern exclusively.
Some weirdness going on.
Live. Einhorn live.
We've got
join me.
We've got our Fed's Mester, right? Let's see if I can go through all of this. Fed's Mester saying, I still expect Fed can cut rates later this year. Now, you need to know that she used to be like a middle of the road, kind of leaning hawkish, but she's been super fucking hawk. The things that she said today scare the shit out of me, I'll be honest with you. So she's saying, I still expect Fed can cut rates later this year. Now, she can say whatever she wants. They can all say whatever they want. They don't make the fucking decisions. We know that already. We know who makes the decisions. We know that they're like, even if they're voters, they don't make the decisions. Fed chair makes fucking decisions, what it is. Always has been like that, always will. Now, they are allowed to talk and flap their fucking mouth and all that kind of stuff. But I'm kind of blown away by it. She said, the Fed can cut rates gradually if the economy meets expectations. She's slightly talking out of both sides of her mouth here, in my view at least. She's also saying she doesn't see the case to cut rates at the next Fed meeting. Does not expect a smooth path back to 2%. Now, this is counter to Jerome Powell, which Jerome Powell wants inflation. I'm going to say it again. I'm going to say it and say it and say it and say it so that you always remember it out there. Inflation should kind of float down. Remember, no velocity in inflation. And she's against that right now. She said she does not expect a smooth path back to 2%. That is counter to what Jerome wants. So she's like, fuck you, Jerome. That's not going to happen. And that is bearish on the stock market, believe it or not. Even if you don't want to believe that, it really is bearish on the stock market. So a lot of what she's saying here is quite aggressive. It's not counter to the belief, or it's not counter to the belief of Jerome saying, we might cut rates, we might not, and we don't need to, and we might need to, and we're coming back into balance and all this kind of stuff. There's a lot of counter stuff to those statements that he's made officially at rate decisions over and over and over again. She also said she doesn't see the case to cut rates at the next Fed meeting, which is inflammatory as well. She expects more inflation moderation at a slower pace. That's counter to what she just said as well. So she's got double speak going on now. She also says the bigger risk to policy is Fed cuts rates too soon. This is also counter to what Jerome has said. Jerome has said you should expect rate cuts, but not necessarily back to back. That is the exact official line from the Fed again. She also says strong economy gives the Fed space to take stock before cutting rates. I do agree with that. GDP is another important factor that we don't talk about too frequently here. GDP does matter. And if the economy is ripping and face off and we have a high unemployment, there's a little bit of consideration for that. GDP also needs to get weakened. And now she says something else here. She said, I see the labor market in better balance, expects a higher unemployment rate. But she said something else here. She said something about unemployment. She said, fewer job openings have been key to rebalancing the job market. Then she wrote, expect slower employment growth, slight uptick in the unemployment rate. So from my perspective, I'm like, well, I know that unemployment rate is at 3.9%. So you're saying that unemployment's going to go to 4% and that's it. We know historically if we get above that 4%, and we're going straight up right now in unemployment if you haven't checked. We're like going straight fucking up. So she's basically saying, no, we're going to go up 0.01 or 0.1%. And that's it. That's all the unemployment's going to go. No more. And I find that risky, that statement in and of itself risky, especially if you want to continue to cut rate or increase rates. Now, I am of the Main Street hat of saying I want rate increases to continue, but I don't think it's going to be like that. I think it's going to be the pause, a rate cut, add some more on top, rate cut, like that back and forth kind of a thing where you're easing in and out of rate increases and cuts. And as long as you can maintain the market believing that, I think he's safe. Now, the problem here is if there's no rate cuts and possibly even rate increases, it should do more damage. It should do damage to where you do see the unemployment rate skyrocketing and blasting through that 4%. And you'll also see inflation slam down and slam into that 2%. And where are we at right now in inflation? We're like three and what? Hold on, let me take a look and see where we're at. There's another bizarre thing. I was just reading a story from CNBC, and they fucking love to use the, what do they call this again? It's one of my favorite ones to read. Every time they use this shit. They always say the Fed's favorite inflation measure. I'm like, yeah, people have used that to cut rates. That didn't work out. That's like a 1950 thing, like the Fed's favorite inflation tool. I'm like, that's bullshit. Even Jerome has even said it in these rate decisions when he was questioned by CNBC anchors. Specifically said, I don't give a fuck about the Fed's favorite inflation rate. I care about year-over-year inflation. And that is a fact. They care about year-over-year, not month-over-month, not 3 months over fucking 3 months, not fucking 6.5 months over fucking, I don't know, divided by 3.12, whatever the fuck it is they're coming up with for new math and shit like that. So my only point there is this, is that there's a lot of contradictory statements in what she's saying. But further to that point, her hawkishness here is not viable for a market that goes up, in my view. There is some legitimacy to, as long as we keep rates high, we keep adding rates, bulls are safe. But there does become a tipping point, is my point here. There is a tipping point in when you see inflation slam down, bounce off the 2%, you see unemployment ramping, and that where you have over-tightened. When you see that over-tightening, you don't get told about it. And what happens in those situations when you've over-tightened too fast, too high, what happens is the market can't take it any longer. The economy can't take it any longer. We start to roll over in anticipation of bad shit to come. What is it at right now? Well, I know it's really 10% too, Jimmy. I know that, and you know that. We all know that. Oh, by the way, Jimmy. By the way, Bork was like, "Who's that guy, Jimmy?" I'm like, "He's one of my best friends on YouTube. He's one of my moderators." I'm like, "We fight all the time on public. It's enjoyable." He's like, "Oh, okay, I didn't know." So I'm like, I get this stuff. Like, I'm with you on, like, I know that real inflation is not what's purported as inflation. I know that wages need to catch up. I realize all that. I mean, I'm hyper aware of all that stuff. I feel it in my own life. Jimmy's back to all caps again. Suck it. Stock market up, oil up, gold up, commodities up, yields up. I say that's inflationary. Well, I truly think you're going to eat the fucking inflation sandwich, Jimmy, whether you like it or not. You're going to eat they're going to force feed you they're going to force feed you the inflation sandwich, whether you like it or not. And you're going to eat that fucking sandwich. You are. You're going to eat it. You're going to eat that fucking sandwich. You don't want to, but you're gonna. Yeah. Whereas, dude, last night, I was on Reddit, and people were talking about the price of what was it? I was reading this story last night, and there was like the sane voice in the room last night. This conversation that was going on. Oh, this was in the Michigan subreddit. If you guys want to look at it yourselves, you can. It was a good talk. So sometimes in the main page of Reddit, you don't get good conversations. But if you go into like the smaller subreddits, you can get a decent conversation. And on the Michigan subreddit, there was someone that posted. It was a very honest, good conversation. And it was about someone saying, I make $20 an hour. I said, I make $20 an hour. I need some water. I'm losing my voice. They said, I make $20 an hour. And I have to move back in with my parents. And sorry, I just burped. Paul, I've got a lot of stress right now. I'm on a bunch of calls and dealers that don't want to pay it till tomorrow. Or the close. Or the fuck. They did this shit yesterday, too. I'll just keep fucking buying, dude. Just keep fucking buying. So let me bring that over for you. So because conversation was going on last night in the Michigan subreddit, and it was really fascinating as people were nice to each other, and they were honest with each other. And there are a lot of people came out and said, this is how much I bought my house for back in the day. This is how much I bought my house for back in the day. This one I bought my house back in the 70s, back in the 80s, back in the 90s, back in the 2000s, back in the aughts, I guess sometimes they're referred to. 2010s, 2000 teens, before COVID. And there was a lot of different people that talked about what their mortgages were and what they pay today and all that stuff. And there was the one overriding fact, which is the dollar's always gotten cheaper. No matter what. No matter what fight they've ever put up, no matter what bullshit they've ever told us, no matter what they fucking say, they've fucked us. They bend you over, they fuck you in the ass, and they fucking do it raw dog, and they fuck you for 10 years, 20 years, 30 years, 40 years. And the idea here would be the same, right? Is that when we think that housing will become reasonable again, right? Or rent will become reasonable again, that it's highly unlikely. Highly, highly, highly unlikely. Even if they give you the 2%, it doesn't change the rate of inflation continuing higher. It's like the march higher never stops. You don't come back. You don't come back is the point that I'm making here. So if a house goes, like you might have like a housing rollover and shit like that, like you do cyclically, but you don't ever go back is my point. Like, so if we have this insane inflationary period, which we just had, right? And a fucking $300,000 house is now $600,000, right? Which is true, right? 600,000, 700,000. Some people out there asking you for 8 or 9 on some of these shitholes. I kid you not. That's what they're asking. Like stupid money. And you're like, well, when is it ever going to come back? When is that $300,000 house ever coming back? 300,000? It never is. It's never coming back. Ever, ever in your lifetime. It's never, ever coming back. You're never going back to that $150,000 starter home, that $100,000 starter home in a great community. That stuff's gone forever. You're never stopping that rate of inflation, even at 2%, of it not going up and up and up and up. And it sucks to say it. What does that mean? Like, what does that mean to you out there, knowing that it can't be nice, right? If I was young, if I was like 20 or 30 years old, it would be easy today to fall into a trap of, I'm going to wait for it to come back down, or I'm making $20 an hour. It's still not enough. I'm going to stay at my job. Like I would be like panicking right now, but I need more money. I need to make more money. I need to ask for more money or get a new job. Dude, like I would be considering FedEx right now. If I was like a kid out of college or something like that, or even my own daughter, my oldest daughter, I've had spoke to her already about this. Like, maybe you should get a 4-year degree that you can get like, you could be like a I don't know, respiratory therapist or something, just in case, so that you always have something to fall back on. That's going to pay you $90,000 or $100,000 a year immediately after college, no matter what. And I mean like guaranteed. I don't mean like get a degree and you might make 60, 70, 80. You might get an entry level 90, possible. I mean like maybe you just need something that you're guaranteed you're going to make X amount of dollars. Like a nurse, right? You're guaranteed you make X amount of dollars if you have a degree. And she wants to be a doctor. And I'm still like on this fence, like, what kind of doctor do you want to be? And do you want to be a researcher? They don't make a lot of money. You going to be a professor? Like, they have to get tenure. That's another 20 years of you working your balls off. Like, so many traps for kids when they get a degree that they're not going to get paid is my point. There's no guarantee they're going to get paid. There's no guarantee they're going to be able to catch up to inflation, all that kind of stuff. Yeah, buy Powerballs, cry on TikTok. Exactly. That's why I gamble in the stock market. Look at him, dude, just selling PT1. Just fucking point blank sell right there. I'm still long calls here. I'm looking for the end of the day thing like they did yesterday.
Reverse repo operation.
Nice bottoming on Qs right now. Hourly trigger's slowing down, but this concerns me in a big way here. This hourly trigger racing down like this, and the pinning of S&P 500, the pinning of Qs right here is very dangerous for bulls. This is not a good sign. I don't like seeing this. I don't like seeing the hourly trigger come down. Do you want to see what happens when the hourly trigger crosses? I can show you that. If you want to see that, what happens when that happens, it's a doozy. Right now, here it doesn't cross right here, and you still get a violent move down on any up trade. Right, boom, squeeze, straight back down again. But you want to see what happens when it actually crosses. There's no cross right there. No cross. Hold on. Now there's no cross right there. Nope, no cross. Let's look at a cross. What happens when we actually get a cross in the daily trigger? Someone's setting it up. They're trying. This wasn't too bad. Crossed, but only briefly.
It says gasoline and diesel fuel stocks remain high.
No guarantee of up and down move, but this is a pretty big move right here. What is this? No confirmation, but this is
counterparties take 448 spots.
1.5% right there. Just the violence in this move. That's big, right? 1.5% from touching the daily trigger. It's pretty big violence, right? Bam, 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 bam. Danger, danger, danger. Now, what happens if we reject it, though? Let's go take a look at it. We can. I'm on a 30-minute. I don't know if I can get that far back in data. Yeah, last time we actually crossed, it was fucking ugly. See it right there? You get that hourly trigger actual cross, and we fucking correct in a big way. You get the price rejection above, and you get the velocity in the hourly trigger coming down. See how violently down it is? And so just right here, there's probably two outcomes coming up. So here was probably, or it looks like right now that there's some kind of a hourly trigger still pretty much vertical here, right? So you get like the squeeze up, bam, 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 at minimum, bam, 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 then a move higher. That's still a lot of volatility in there, right? Whole ton of volatility. And violence. And if this thing keeps heading down like this, hold on. Every time this thing switches over, You're talking about a move up like this, but then bam, and then boom to the downside. And it gets fucking violent down here. That's your 2% move at minimum, if not even higher. So pay attention to this. We'll keep monitoring it. I don't like the hourly trigger coming down as violently as it is right now. I would like to see the hourly trigger pull up, even if price stays down here. We're not seeing that at the moment. Still seeing that violent move down on the hourly trigger. Still a lot of danger for bulls here. Can't put size on here at this moment. There's no like long bull trade for like 50K, $100,000, 30K, any of that kind of stuff. Still volatility in the market. Still violence in the hourly trigger moving lower right now. Just be conscious of it. Any kind of squeeze higher right now, I'm going to expect to get sold. So even if Qs go up here, trade 441. Oh, dude, this fucking thing's pissing me off now. Oh, this is really pissing me off how this fastest thing moves. All right. On here. Even if you come up here, trade all up here, I'm going to still expect another move and some more violence to the downside. So no safety yet for bulls. No big trades for bulls. Nothing that I can see at the moment. And if you see that cross down here, it'll be like boom 1%, boom 2%, boom 1%, down 2%, and just violence in that move. 1:19 in the afternoon, usually vol control crowd comes in. We'll see if they do today or not, or if they save it for the end of the day. Yesterday they saved it for, what time in the daytime did they send that squeeze up? It was like 3:50 in the afternoon. Didn't take the hedge off until the last 10 minutes. So we'll wait and see what they do today, if they squeeze it up again just like they did yesterday or not. SPY trying to form a base, or SPX trying to form a base down here on 5,200.
In 10 minutes time at 1:30 p.m. Eastern, we have Fed's Daily speaking in a Southern Nevada fireside chat, followed by an audience Q&A. There is not text expected.
Vol control gain normally comes in at 1:30 in the afternoon. $1 down day. Not a big day. Right? Remember we used to wake up in the morning, we'd down like 3% in the morning? Those days sucked.
Is very much priced in. I think the it's not just China, by the way. We're also seeing a recovery in early cycle indicators, whether it's Asian export growth, but also PMIs and other data points.
I'm going to go potty, be right back.
Picking up. And also remember, geopolitics are not just impacting the supply side, as they normally do, but also they're impacting the demand side. We are now traveling much longer routes around the world, and ships are having to move at faster speeds because now you can't go through the Cape, through Suez or through Panama Canal. So you have to go through the Cape, you have to go to Magellan, and that takes a lot longer. So we're seeing, like I said, much longer routes, which at faster speeds, driving up demand considerably. So now we're thinking consumption growth is going to end up being a lot firmer in 2024.
Do you expect that demand to hold up, especially when we're talking China numbers? Are you seeing them like some of the others, that this is an uptick, or do you see it as more of a blip?
No, we think it's more sustained. I think it's more sustained, and obviously one of the challenges that the market will likely face, and will soon come to it, is there's been the expectation of a June rate cut, followed by 2 more cuts into the second half of the year. So I think we're back into this mode, into this battle royale, as we called it before, between oil and money. We see oil prices fighting the Fed once again, and we'll see. I mean, it's been an interesting battle between OPEC and the Fed, between Prince Abdulaziz bin Salman and Chairman Powell.
But we just spoke at the beginning of the show, right? Especially markets are reflecting some skepticism about that rate cut in June. And I think it was Peter Bookvar at the beginning of the show said that that's about 50-50 right now. If we don't get a June rate cut, what does that mean for the price of oil?
I mean, I think coming into the summer, it doesn't mean a whole lot, because we still expect it to be a bumper travel season. We think people are going to be driving a lot and also flying a lot. And supply is tight. Now, coming into the end of next year, into the end of the year, into 2025, things start to loosen up a little bit. We do have a fair amount of supply growth coming out of places like Guyana, Brazil, Canada. We also should see maybe not as fast growth in the U.S., but we still see some growth in the U.S., and that hopefully comes to a rescue. There's also some more refining capacity coming online, particularly in Nigeria, and at some point in Mexico. We're going to also see Middle East refining capacity. But remember, there's been lots of issues in the past few months, including attacks on Russian energy infrastructure with Ukrainian drones that have also reduced the availability of diesel and gasoline fuel. So there's a lot of stuff happening simultaneously, but again, we think it's more of kind of a 6-month blip that prices can be firm, not so much into 25 where like I said, there's more supply coming, and eventually the energy transition will lead to an erosion of demand trends as well.
Right. So do we ever see Brent back above 90 again? I mean, the last time we saw that was last October, and you talked about how over the last few years, it's been a lot more volatile, but we're seeing this sort of period of relative stability, even with all of the geopolitical tensions and supply that you were talking about. Are you seeing it more stable over the next few years?
Well, we're only $1.50 away from 90, so I think it's just literally kind of daily volatility for oil prices that kind of move. So we're around 24% of oil right now. It's about 1.5% daily move. So we could easily break that. But I think medium term we see stability. I think our long term view is that oil is going to be a $60 to $80 a barrel commodity. Long dated Brent prices have been very well anchored at around $70 a barrel, despite all the volatility we've seen in the front. And part of it is this big question mark around the transition. We are supposed to move away from fossil fuels. Will we not, or will we not, is a different matter. But for the time being, the market is not going to price a shortage when OPEC's spare capacity is close to 5 million barrels a day. Could that happen medium term if some of the investment falters and demand doesn't come down because we don't really shift away from internal combustion engines? Potentially. But I think certainly
Southern Nevada fireside chat, followed by an audience Q&A. There's no text
We've certainly
expected.
seen some of that shift to EVs slow. Francisco Blanch, thank you very much for being with us today.
Thank you.
Speaking of energy, it could be the story of the summer, according to one chief investment officer on Wall Street. He is looking at 3 large cap names, including Chevron, which has lagged the broader market so far this year. For the full list, you can scan that QR code right on your screen or go to cnbc.com/pro-pick. Coming up, the Fed's rate cut timeline keeps getting pushed back, but Cleveland Fed President Mester warns that the bigger risk to the economy is cutting too early. We talked a little bit about that. What does it mean for their fight against inflation? We will debate that. And as we head to break, here's a look at some of the names bucking the trend today, hitting new 52-week highs, including Dow Inc., Kroger, Freeport, McMoran. The Dow drifting back towards session lows, though. The Russell 2000, that's down more than 2%, so small caps really taking it. The exchange is back right after this.
Shortly expecting comments from Fed's Daily.
Call us today.
Welcome back to the exchange. Let's get to the markets right now and do another check. The Dow is near session lows, down more than 500 points almost 500 points at the moment. The Nasdaq Composite made back some of its losses, but still down by more than 1%. And the Russell 2000, taking it the worst, small cap index is down 2 2/10%. Let's take a look at some individual names. Trump media shares rebounding from yesterday's 21% drop after the company reported a net loss of $58 million on revenue of just $4 million. Shares are up about 4% since their public debut a week ago, climbing as high as $79 a share before falling. Should come as no surprise. This is incredibly volatile. We've been talking about it a little bit as a new class of meme stocks and certainly acting that way, but is higher today, about 7%. Take a look at Bitcoin as well. It is falling 6%, now trading at around $65,000 after posting its 7th straight monthly gain, down 11% from its all-time high in mid-March. So today, acting perhaps more like risky, speculative tech stock than it is a store of value. We talked about gold, which is higher in the session today. We'll keep an eye on that. Let's get to Tyler Matheson for a CNBC News update.
Deirdre, thank you very much. At least 29 people have died in a massive fire that broke out in a nightclub in Istanbul. Was undergoing renovations there. According to city officials in that Turkish town, 6 people have been detained as part of the investigation into the fire. The exact cause still unclear. Meantime, the Department of Transportation announced a new safety rule requiring the largest freight railroads to have at least 2 people operating their trains. It comes more than a year after a Norfolk Southern train derailed in East Palestine, Ohio, spilling toxic chemicals. The White House first proposed the rules in 2022. Legislation to address the issue remains stalled in Congress. And pop star Taylor Swift is now a billionaire. Forbes released its 2024 list of the world's billionaires today, and Swift made the cut for the first time with her estimated $1.1 billion fortune from her red-hot music career and real estate portfolio. Bernard Arnault of LVMH, Elon Musk, and Jeff Bezos held the top 3 spots on that list. I looked hard, Deirdre. I didn't find my name.
It's coming, Tyler. Yeah. Not long. I want to hear about Taylor Swift's real estate portfolio. I would take a segment on that.
That would be good.
I will see you soon, Tyler. Still ahead, Salesforce is up 50% over the past year, benefiting from the AI boom. Later on, we will speak to the executive who is overseeing all of the company's AI efforts, including today's broader rollout of its Einstein Copilot. And before we go, check out health insurer stocks. They are plunging after the Biden administration did not boost payments for private Medicare plans as much as the industry and investors had hoped for. Humana, which is more dependent on those specific plans, is getting crushed the hardest today, falling to its lowest level in 4 years since 2020. We're back right after this.
CNBC.
Welcome back to the exchange. Markets lower across the board with the Dow the biggest laggard as the street adjusts its rate cut expectations following stronger than expected data. The 10-year yield touching above 4.4 for the first time since November, though it's now below that level. So how should you position? Joining us with her trades is Victoria Green, G Squared Private Wealth CIO, and CNBC contributor Peter Bookvar is back with us for more. And as a fireside chat with San Francisco's Mary Daly gets underway, our Steve Leisman has what it all means for the Fed's next move. Steve, let's kick it off with you.
Deirdre, thanks. After ignoring the bond market for much of the recent rally, stocks look now to be declining in tandem with rising bond yields. So what's bugging the bond market? Well, in addition to hefty supply, it's a weekly thing, there is slowing progress on inflation. Take a look here. Between October and December last year, core PCE fell from 3.4 to 2.9. It's a 44 basis point decline, but it's moved only 16 basis points since December with those firmer January and February reads. Over that time, market-based 5-year inflation expectations, after falling to near the Fed's 2% target, have ratcheted back up by 33 basis points to now stand at 2.38. The predictable result? Well, the market's confidence in a June rate cut has not disappeared, but it has weakened. Traders put the probability of that cut at 75% a few weeks ago, now stands around 59%. Cuts are still on the table and solidly in the Fed's and the market's forecast. Cleveland Fed President Loretta Mester saying today that she thinks it's appropriate to cut rates later this year, and the inflation picture has not changed much, and that's because she expected inflation progress to slow. It remains likely inflation, she says, will decline to the 2% target over time. Yet she is still not confident enough to cut votes now without a few more months of improving data. All of this comes with improving forecasts for first quarter GDP and growth. But stocks seem to be coming to grips with the idea that declining inflation progress and rising growth prospects undermine that confidence in when those Fed rate cuts might begin. I have a chance to talk about this tomorrow at 8:30 on Squawk with Atlanta Fed President Raphael Bostic.
Yeah, and
Deirdre?
Steve, I know you're going to go monitor Daly's fireside chat. We'll get back to you with some of the headlines from that. But let's get to our guests now. And Peter, what's your reaction to what we've heard so far? And what do you expect to hear from Mary Daly?
Well, Daly's important because she's also a voting member. And there's one thing about Powell is he likes consensus. Mm-hmm. So now we've heard from Bostic, we've heard from Waller. I'm assuming Bowman is a hawk. Powell spoke. So I find it hard to believe that Daly is going to deviate that much from what they have said. Now, also, June's far off. So there's no reason to commit right now to what you want to do in June. So I think she's going to remain very non-committal with respect to her commentary.
Victoria, let me ask you something that we haven't really discussed. What if rate cuts aren't all that important? Do stocks benefit more from a healthy economy than they do looser policy? Is that being sort of forgotten in today's trade?
A little bit, yeah. And we're going to hit earnings. I think JP Morgan kicks us off, next Friday when financials really get us into Q2. And if the focus is on earnings and we have solid economic growth and we have earnings growth and we can see then, profit expectations rise throughout the year, then absolutely stocks can overcome any cuts or lack thereof. Right. And it has been more of a focus recently. Right now we're in a dead period. Nobody's really reporting. So everything's on economic data. And so it's very, very heightened. Obviously, all eyes on unemployment Friday. And it's a little bit of potentially bad news is good news. If we have some bad unemployment stats, potentially that balances out sticky PCE. And I do think they will be data dependent. Everybody get their Fed bingo cards out, data dependent, patient, weigh the pros and cons. I think we're not going to see a huge policy shift unless we really get continued acceleration of inflation. And that deflationary goods trend is one that I'm watching. We've seen that really, really help with inflation, but now we've got commodities on the rise. So we got to make sure we're kind of watching the good side. But I like that. ISM, PMI, in expansionary territory, China data wasn't horrible. Some of that stuff is there was a lot to like on the economic front for stocks that are in the business of selling things.
Right. And even on the earnings front, I mean, it was the Magnificent Seven that carried the broader markets all of last year, but we've certainly seen more breadth this year. I saw a chart that showed that the S&P 500 X the Magnificent Seven is actually we're looking for better earnings out of them than the biggest mega caps themselves. What does that mean for the rally?
Well, sir, I think it's fantastic to broaden out. I think that was always a problem. We were so concentrated. And I think right now the Magnificent Seven is breaking up, kind of like the Beatles back in the day. It may not exist anymore when we're seeing the struggles. Specifically today, you know, with the Tesla issues, which is very much concentrated on EVs and vehicles. And so it's great. I think there's a lot of profit possibilities. I think the valuations aren't quite as stretched as everything else. I think if you look around, the value trade, the cyclical trade, energy, industrials, financials, those are working a little bit. You know, we always have risks that could pop up. Will CRE come back into play? Will regional banks be an issue? Will we suddenly care about the debt levels? None of that has mattered yet. If a company can produce earnings, if the company can raise expectations, especially if the company says, hey, we think we can make a little bit more money, I think that's great. The one area I think is going to struggle, which you're seeing today, is small caps. Small caps tend to be more levered. They tend to, you know, if they're going to have to refinance at higher rates, you know, that's a drag on a lot of them, and that could be an issue, and you're seeing that play out with the Russell 2000 today.
Yeah, that's right. It is the laggard. And by the way, though, you could argue that the mega caps are becoming more like the Beatles because they're the Fab Four now, right? But that aside, Peter, Victoria brought up sort of these risk factors that the market have largely ignored over the last few weeks and months. We saw a great first
we need
quarter.
to see how long to
Any
leave
of those
rates where they
things
are.
that she listed worry you most?
Well, as I said earlier, the economy is not strong. There are pockets of strength, but there's also pockets of weakness. I mean, you have the auto sales, which were
Daily says there's
coming
no
in today.
urgency to adjust the
They're
rate.
still running well below where they were pre-COVID. You have the pace of existing home transactions near a 30-year low. You have lower-end consumer that is essentially in its own personal recession, whereas higher-end consumers are doing better. You have global trade that's sort of based on what we've seen in the economies in Europe, in Asia. Manufacturing, yes, we're beginning to see some embers of hope, which I hope will continue, but it's still in a contraction when you look at it globally. So it is not an easy picture to really glean, and it's not strong. There are pockets of strength, and there's certainly pockets of weakness here. And I think that's and what the Fed is going to do is obviously going to complicate this. I think higher for longer is a real thing. And while we throw it out here in the financial markets, it really matters if you're a borrower. If you have debt coming due this year on a loan that was priced pre-2022, you're in trouble if you don't have more equity or you don't have free cash flow. Because that debt is repricing from probably 3 to 8. So there's still a lot of pain to be had from interest rates staying high for a longer period of time.
Peter Brokfire, you kind of came full circle there, so thank you. We'll let you go now. Victoria, thanks for being with us as well. Still ahead, Tesla is one of the biggest drags on the S&P today, posting a big miss on Q1 deliveries. We will dig into those numbers, what's next, and how the competition is faring. That's coming up.
Daily says there is a supply and demand imbalance in the housing market. So Daily says the economy is improving and there is a path where interest rates start to adjust this year. We're just not there yet. Fed's Daily says 3 rate cuts this year is a reasonable baseline. Daly says if the labour market starts to falter or inflation comes down faster, we are in a position to cut rates more.
Take a look at Tesla shares. They are down sharply after a rare year-over-year drop in deliveries. Phil LeBeau has all the details. Phil, Musk warned us of notably slower growth, but this was slower than anyone had expected.
Way slower than what people were expecting, Deirdre, and a number of factors in the first quarter with the issues with production out of the Gigafactory in Berlin. China has become a much more competitive and a slower EV market than what we've seen in the past. So when you look at the total number of deliveries for Tesla in the first quarter, coming in at just under 387,000 vehicles, 70,000 fewer than the analysts were expecting in terms of a consensus, and down 8.5% compared to the first quarter of last year. The question now, what happens with full year deliveries? At this pace, they come in at about 1.5, 1.6 million. They delivered 1.8 million last year. By the way, Tesla has yet to give official guidance in terms of what it expects to deliver for the full year. Other auto sales that we got today in terms of the first quarter, Rivian, Q1 deliveries, 13,588 vehicles, roughly in line with expectations. And then you've got the three Asian automakers who are big into hybrids, and they are reaping the rewards of it, at least with Toyota and Honda. Toyota up 20.3% in the first quarter. Honda 17.3%. There you see Hyundai, record first quarter sales there. And finally, General Motors, Q1 sales declining 1.5%. Keep in mind, there was a big drop in fleet sales in the first quarter, down about 22%. That's one reason why the sales overall were down 1.5%, with EV sales coming in at just under 16,500. That's important because, Deirdre, they're ramping up into the Ultium battery cell production. That's going to be crucial to EV sales this year. Oh, and one other note, Nissan up 7.5% in the first quarter.
Phil LeBeau, thanks very much for breaking that down for us. Coming up, Salesforce slightly lower today, but up more than 14% so far this year. We're going to talk to the CEO of its AI division about how they're expanding those capabilities. That's next. Equities still near session lows, and we had San Francisco Fed President Mary Daly speaking about the economy in a fireside chat. Let's get over to Steve Leisman with the headlines. Steve.
Hey, Deirdre. San Francisco Fed President Mary Daly sort of joining the chorus of Fed folks being in no hurry to cut rates. She says inflation is coming down, but it's bumpy and slow. There's no urgency to adjust the rate right now. 3 cuts she calls a reasonable baseline, but not a promise. Says the Fed has to be prepared if inflation proves to be sticky. Therefore, standing pat, Daly says, is the right policy for the moment. Economy is improving. In fact, she calls it solid, but says there's a path where interest rates start to adjust this year, just not there yet. There's a real risk, she says, of cutting rates too soon, really echoing what we've heard from other folks, including Waller, including Mester this morning. If we lock inflation in at this level, she says, she calls it a toxic tax. Finally, she says, steady in the boat is the right mantra for now, Deirdre.
As you said, Steve, kind of joining the chorus, so we're not seeing much of a reaction in markets at the moment. Thank you for that. Meanwhile, shares of Microsoft, they are down about 1% today as the prospect of higher rates for longer pressures tech. It's one of the biggest drags on the NASDAQ 100, along with Broadcom, NVIDIA, and AMD. Microsoft announced yesterday that it plans to split up its Teams and Office bundles following scrutiny from European regulators. Analysts at Mizuho say the move will be incrementally positive for Zoom, which makes a rival video product. The firm also saying Salesforce-owned Slack could see a boost from the breakup. And speaking of Salesforce, the company revealing today that it is expanding its Einstein Copilot capabilities to its Tableau platform, and that the AI tech will be widely available in the next few weeks. For more on that launch, let's bring in the CEO of Salesforce AI, Clara Shai. Clara, great to see you. I'm sorry we can't be in person in San Francisco this time. What are you seeing? I mean, we're certainly seeing this pullback in some of the tech names, some of the AI winners today, but when you look at your customers and what they're using Einstein Copilot and these generative AI tools for, do you think that spending is going to only increase in these products in the year ahead?
Absolutely. Thank you so much for having me. It's the customer response to our AI products and platform has been tremendous, whether it's Slack AI or all of the service users and sales teams and marketers and commerce managers using Einstein. We're really seeing tremendous productivity gains.
Now we have Daly coming out and saying 3 rate cuts this year is a reasonable baseline.
It all comes down to business outcomes, and customers are willing to spend where they see a return.
Are they spending, is it additional spend on Einstein Copilot, or are you offering it to them as part of their existing package right now? How are you guys monetizing?
So we've heard a lot of different types of requests from customers, and we're addressing that demand really through 2 ways. One is we have a new Einstein One edition for sales and service and for our industries that allows our customers to get everything that they love from Salesforce, including Einstein AI, Data Cloud, Slack, other features and functions all packaged together. And then for those customers who want to specifically purchase AI, we have add-on seats, Einstein for service, Einstein for sales, Einstein for platform that customers can easily buy.
Obviously, Salesforce serves a wide range of industries. Which industries are you seeing is sort of picking up quickly to the generative AI tools?
You know, the amazing thing, Deirdre, is that we're seeing it across every industry. You know, financial services companies, from banks and wealth management firms, mortgage, insurance, health and life sciences, pharma companies, public sector. It's really demand across the board. And I think it speaks to the power and potential of bringing AI and data into every organization.
And how is that affecting their efficiency? Earlier on in the show, we were talking about the upcoming earnings season and how we're going to see more companies outside of the mega caps sort of see better earnings. The breadth of this rally and the earnings trend is going to broaden out. Do you see on your side this helping efficiencies and productivities at companies?
Absolutely. I mean, I think when you bring data in and unlock kind of previous silos and trap data in every company, it really unlocks tremendous possibilities. And so we look at service representatives who are now able to answer questions much more quickly because the AI is automating the drudgery and the mundane work of having to look up knowledge articles. And now customers like Wanolo and Gucci and ADP are seeing...
Added another 100 contracts. They're cheap right now. They're like $400, so...
How is that impacting efficiency and productivity at Salesforce itself? I remember, I think it was a few years ago, activist investors were demanding more profitability, and you guys have actually come some ways of doing that. What's the opportunity for generative AI to further improve margins?
You know, one of the things that I've always appreciated most about Salesforce is how much we adapt our own
I'm gonna wind up owning all the fucking I'm gonna end up owning all the fucking 520Cs by the end of the day.
Success team. And so our own teams have been the very first to test out, give feedback on, and adapt everything from Einstein GPT for sales, so account summaries, generating emails to customers, as well as on the service side, service reply recommendations and case summaries, et cetera.
Clara, thanks for being with us. It's good to see you. I'll see you back in the Bay Area, I'm sure, soon.
Likewise.
Clara Shai. And Clara is one of CNBC's inaugural change makers. There's still time to register. These are women transforming business.
No, they're dirt cheap.
An event in New York City on April 18th. To request an invite, you can scan the QR code on the screen or go to cnbcevents.com/changemakers.
You ever lose a futures trade? You never lost 20 grand?
Power lunch after the break. Stay with us.
100 grand or anything like that? I'm not that much in it right now. It's not too bad. But they're dirt cheap. They're only fucking 4 cents a piece. I can do this all day long with them. Sorry. I'm in a meeting right now. I can do this all day long with them. They want to pull this shit in the daytime. They want to pull it at the close. They want to do it in the overnight. I'll fucking piss away change all day long because I know one of these prints is going to be like 300%, 400%, 500%, 800,000, 3,000%. It's like every fucking time. So it's like clockwork. Yesterday was the same bullshit. I kept DCAing yesterday, and we fucking cranked. Like, I took like 60 cents off like a fucking 17-cent fucking DCA by the end of the day. So we can do this all day long. We can fuck around all day long with these zero dates. Yeah, bears basically get like, it's not easy being a bear. You basically get what? 1, 2 chances, 3 chances. Normally in a downside move, 3 chances. Once you're done with that shit, they start squeezing this shit up and it's going to be gangbusters. So.
And Daly says we don't see weakness.
I truly would say they probably have one more. If you're a bear, you get like one more leg down if you break through the daily trigger, and then you get a giant squeeze play. So one way or another, they lose, or the house loses. So it's either going to be a 0-8 into the end of the close today, 0-8 overnight, or we blast down one more day this week, and then it's just fucking full tits long.
Judge FOMC meeting, but won't rule out the June rate cut. I'm watching oil prices, but the rise would need to be sustained to be an issue.
Huge drag on the index.
Fed's challenge is balancing risk between jobs and inflation goals, and the data will determine how Fed manages monetary policy.
Big tech also tumbling today. The Nasdaq down more than the S&P on a percentage basis. And the so-called speculative tech trade is getting hit particularly hard. It's a bad day for Cathie Wood. Her ARK Innovation Fund is down 3%. And Tesla, it's one of her biggest holdings, and it's falling after delivery numbers disappoint. We've also got Coinbase falling along with Bitcoin, and Verve Therapeutics losing a third of its value after its cholesterol drug caused side effects in a trial.
All right, is today's action a signal maybe that the market is turning just a bit? Those 7 big tech names that carried the market last year, they're starting just a bit to fade. In fact, they've been fading for some months in some cases. So should investors now look elsewhere? Are old names becoming cool again? Seema Modi is looking at the new look GE, which has been a stealth out.
And to be honest, yesterday I should have went in like
It's not often. And
should have went in like fucking 500 to 1,000 contracts yesterday.
with General Electric, which continues.
That's what I should have fucking did.
Over 80% in the past 12 months, its highest level since 2017.
So we'll see. Even if this doesn't work, I'll do it again on the close. I'll buy 0 dates tomorrow too. If they don't ramp this shit up into 3 p.m., 4 p.m., that close I'm going to buy as well. And I'll even buy the open tomorrow if we roll it down.
Culp telling me today he's excited about
I want to catch that squeeze one way or another.
finding ways to further integrate artificial intelligence into the business. He also added that he's very optimistic on China, despite the disappointing economic data, sharing that airlines there are looking to modernize and expand their fleet. Now, as to whether the stock can continue its run, spoke to Tony Bancroft, who runs Mario Gabelli's commercial aerospace and defense ETF. He said GE remains one of their biggest holdings, and given the strong backlog that the company has, the valuation right now, they say, is justified. Tyler and Dee.
All right, Seema, thank you very much. Let's talk a little bit more on how to position in the market right now. David Spica is Chief Market Strategist at Turtle Creek Wealth Advisors. David, always good to see you. Thanks for being with us. What do you make of or read into GE's outperformance in recent months relative to the Dow?
You know, I thought about that, Jimmy, but I'm not really like.
Is it a tell?
I've DCA'd enough here where I'm feeling okay. I don't want to spend any money on puts.
If you look at what happened in
This is all to me. This is all. Even if we go down here, this is all selling puts.
You're starting to
Put selling going on in here, and eventually we're gonna fucking rip it. So I don't want to keep like wasting money. Like so, Jimmy, yesterday I bought puts for 12 cents, and I fucking lost 4 cents on them. I got out at 9 cents yesterday in puts, and I should have just stayed in the calls. Like DCA. And as they're burning these calls down, right, you can see what they're doing, right? They're just torching the option chain. But if we get one of these moves up here, you're talking about like 4 fucking cents to 70 cents. They might not do it today. They might pin it in the close because we do have volatility coming. But one of these, like, if I'm DCA'd in here for like, let's say I'm DCA'd for like 9 cents, 12 cents. I do this 3-4 times. I'm going to print 4, 5, 3, 4, 5, 6, 7, 800%. So I'm going to start coming in heavy here with some size. Like today, tomorrow, into Friday, size, and then one big trade with a spread of some kind. And I don't really give a fuck where price is. It's either going to be back testing on the HT or a blast through the daily trigger. And put on some kind of a trade for the quarter. Well, at least for the month. I don't want the quarter trade. I just want the month trade for. I want the month trade for fucking 530, 5,300.
that are less expensive, that also have attractive earnings growth potential.
And we're sitting on SPX right now at 5,200.
It's been hard to make.
So I like this price down here. I would prefer 5,100 down here. If you were looking at this one right here, I prefer to buy this one to go to 5,300. But we're pretty fucking close here. So if we end up blasting down here like tomorrow, and that's the trade to 5,300, I'll take it. Like anything here with a spread will be fine.
Have a bigger impact on small.
I feel fine right now. I feel good. Whoop, sorry. Whoop.
As well as
it's like
companies do.
Whether it's here, I don't care if it's here. I don't care if it's here. But my thesis is still to 5,300. So any of this is going to work for me. This always works for me. Every fucking time it works for me. I hate it because it sucks to buy a dip.
We need to see small cap.
Or it sucks to buy a dip on Doom, right?
We saw in March.
And there is something else in here, like all this stuff over here. This is where shit gets dangerous.
Another example, though.
Any price action below this zone down here, like rejecting, that's when I'll get my fucking bear on. I'll start selling rips. I sell rips below this here.
$90 here amid escalating.
Buying dips down here all day long. Buy dips, buy dips.
By Ukrainian drones on Russian oil infrastructure, including today on Russia's third largest refinery. This comes as OPEC and its allies continue to keep a lid on supply, while demand has remained steady.
Even if it's a loss, buy the dip, buy the dip, buy the dip.
Sector pacing for a record,
and especially when it's dirt cheap. Like right now, it's dirt fucking cheap. 4 fucking cents for fucking 100 packs of calls.
See on that chart there. Now, Morgan Stanley recently upgraded the sector to overweight, noting it trades at 2 times the historical discount relative to the broader market. So, in other words,
and here's another perspective thing for you.
Now today,
you got to remember, we sit on like rate decision days,
including Diamondback,
and we'll be sitting in a rate decision. Like, think about perspective-wise. I'm sitting here right now trying to catch another squeeze up, and if this was a rate day, I would be exposed to like 60, 70 cent, $1.50 calls on gamble, right? Day like today, torching both sides of the options chain, catch some arbitrage to the upside. It's a no fucking brainer. You can go from like 5 cents to fucking 30, 40, 50, 60, 70 cents. You're not going to do that on a rate day. You're not going to go like $1.50 to $13. Exposure's big.
Range is probably a nice middle ground that doesn't create too much inflationary pressure, but is a good sign for the economy. And yes, we do like energy. Again, that goes back to our theory on owning cyclicals. Energy stocks have been a bit out of favor, but we do think that's a good place to be, particularly if we're going to have this soft landing and a renewed economic resurgence globally.
Energy is a big and sprawly sector. Where specifically within that sector would you be putting money? Refiners, exploration companies, power companies. It could be a lot of different things.
Yeah, the power generation area, Tyler, is very intriguing when you think about the amount of power that's being required in the United States today and in the world, given the move toward
exactly. Take the hedge off, reset yourself as a bear.
All the demand for power. So anything that's related to power generation, and that would include fossil fuels as well, because they're going to be powering these utility plants, are going to be able to fare well in this environment.
What about AI and data centers? They require a lot of energy as well.
Absolutely, and thank you for bringing that up. AI and data centers are probably the biggest factor in the demand for power, and so absolutely, you're going to want to own companies that are going to benefit from the growth of data, the growth of data demand and data centers, and again, that's something you can own in the energy sector.
You mentioned China a moment ago and the possibility of better than expected growth in that country. Do you see China, for the average individual investor in the United States, is it investable today?
That's a great question, Tyler. I think the average individual, if you're going to invest in emerging markets equities, obviously China's a big, big component of that. Your best opportunity is to go to with an active manager who invests in China as well as other Asian countries that'll benefit.
The one thing that's really pissing me off here too is, if you're not watching this, the one thing that's pissing me off here is
Chinese equities, because there's still so
they're intentionally pinning this because they're trying to pin this market.
Communist China, but I do think
so. You got hourly triggers now at 520. The whole game plan here is pin this long enough to get the hourly trigger down so you can get a rejection right on 520. So you can set up more doom and gloom to the downside tomorrow. You can already see it. It's like already playing itself out.
6%, while gold rises to a new all-time high, and Dom Chu has been looking at those numbers. Hi, Dom.
All right, so Tyler, let's get
I get what's going on
right out there with regard to gold. The record price earlier today was $22.97, spot 90 for gold futures, and right now, as things stand, this will be the 6th straight day for rising prices. Yesterday's record was powered by inflation data coming in as largely as expected late last week, which then led to...
I think the one thing that sucks about it, the most about it is nobody's positive, right? When you're buying dips, it's like everybody's doom and gloom. Everybody's like, blah, 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 bad shit's happening. Oh my God, the world's ending, all that kind of stuff. And you're like, well, I'm trying to go long here.
Mining stocks.
And it goes counter to your brain. Like, your brain is like, it's one of the most counter things you could ever do.
Up about 0.5%.
Like when everybody's happy, everybody's like, yeah, dude, we're going up, bro. You know, it feels great to buy calls. But I normally don't make a ton of money that way. What happens when I'm normally buying calls while everybody's stoked, I'll usually have a good run, and then I'll get destroyed. So my win rates are always better when it's doom and gloom. Always. Now, Feds-Mester, look at her. They got Feds-Mester in red down here. Look at that. They got her in red.
Weeks ago. The crypto ecosystem.
They got her in red. She was saying some fucked up shit.
Crypto miner Marathon Digital, also business software company MicroStrategy, which holds
like the shit she was saying. I was like, you're out of your fucking mind.
0.5% right now. So a big move in digital and non-digital gold. Ty, back over to you.
All right, thanks, Dom. David, let's turn to gold first, and then to Bitcoin. Talk me through your position on both of those.
Well, gold is an interesting juxtaposition with what we're seeing with regard to the Goldilocks and soft landing narrative. You wouldn't expect gold to be doing what it's doing if we're truly going to have a soft landing and you got cyclical stocks and small caps and others outperforming. So one of the things that, to me, is a big factor there, outside of what's happening in the Middle East and some of these other issues that are creating some angst, is the fiscal situation here in the U.S. If I'm a prudent investor and I see that the U.S. is going to run another close to $2 trillion deficit, and we're going to have to issue new treasuries, and we're going to be at, I don't know, 40 trillion in total debt before long, I don't want to own Bitcoin, and I'm probably a little leery of the fiat currencies like the dollar. Gold is a great place to invest, and I think that's a big part of what's going on. Ultimately, over time, though, you wouldn't expect gold to be rallying if we're truly going to have a sustainable stock market rally and a true soft landing and Goldilocks type environment. That's one of those things we need to keep an eye on that potentially could be a red flag.
How about Bitcoin?
I've got gold getting fucking blasted to the downside here real soon.
Not a substitute.
I don't have gold going up any higher. Like even the gains that have been going on the past 2 days, I'm like, yeah, that shit's gonna get sold down in the fucking dumpster again.
When risk is up,
I can't stand gold. Sorry to say that, but
when liquidity is flush, we're seeing liquidity come out of the market. Treasury liquidity is declining during tax season, probably temporary given it's an election year. But as liquidity declines, Bitcoin recently hit an overbought level. You're going to see Bitcoin suffer from that. But I would never want to own Bitcoin in lieu of the dollar or other fiat currencies because I was concerned about the fiscal situation.
But that is the entire argument that Bitcoin bulls make. Do you think it's time to put that to rest? What are they seeing? And when does it maybe act like a safe haven?
Bitcoin bulls are talking their book because they're invested in...
I mean, listen to this guy. You got fucking gold at like $2,000 a fucking ounce. Then you got fucking Bitcoin at $70,000. It's not even a comparison.
It won't be nearly as volatile as it is today.
It's like,
and you won't have the opportunity.
It's like, oh, I got my one day here. I'm gonna talk my own book.
I just don't see it, and we don't see it as a viable alternative to the dollar or other fiat.
Okay, let's talk about actual gold, the precious yellow metal. An idea that I talked about with the guest last hour is the fact that if China's economy is recovering and you're seeing the consumer bounce back there, are they going to be spending their money on gold? I mean, traditionally, typically, that has been what has happened, but with...
I mean, a bunch of this gold shit isn't even based on real gold anymore, is it?
Under so much pressure.
Thought it wasn't.
That happens this time around. Could that sort of underpin higher gold prices?
Well, I think you're talking about reserves going into the gold and out of the dollar, and I think that is obviously something that could happen. The problem is, or the headwind to that theory is that there's no market in the world that's large and liquid as the U.S. Treasury market is. So as countries like China are developing reserves and they need a place to park the reserves, there's still going to be demand for treasuries. Gold will take a piece of that, but I don't think that really is a threat to the U.S. Treasury market or the dollar in general longer term. But yes, near term.
I mean, the worst part is, too, is like,
here in the U.S.,
the worst part about gold is like,
the fiscal situation doesn't look particularly effective.
Like, I get they need their time and shit like that out there, but it's like the fiat currency and then, you know, precious metals in case, you know, the world implodes.
But it's a good point. So maybe
it's like, what?
David, thanks very much for being with us today. David Spica. Coming up, a show of force against...
You just bought Bitcoin to be fucking rich.
Asked him not to interview the FTC chair on his Apple TV Plus show. We will discuss the growing problems for the company. That's next.
I mean, Bitcoin should be going like right around like 62,000, I think. I think I got it tagged at 62. It should trade 80,000. Like 80 fucking thousand. Do like a... I hate crypto. Like, I can't stand it. But like a triple leverage fucking triple leverage options to 80,000 on Bitcoin, it's got to pay way better than anything gold can pay. Anything. And I don't have gold going to 84. I know there's a bunch of people claiming 84. I think that's where they're gonna trap all the bulls that are gonna stay into 84,000. I got that as top 80,000. Another note here, keep your eyes on this close. So this is the QQQ chart down here. There's a trap here for bulls that think that the run is over for bears. So you can see it right here. When we come up here, right, they're like, the fact that they're buying all this time in the early trigger coming down like this, there's going to be a trap in here for bulls where we squeeze. And the moment we squeeze, it's going to be a big fucking roll to the downside. God damn it. Oh, my God. Here we go. Here, we just screw it all up a bunch. Makes the fucking, the flipper happy. Get it out of its system. But even seeing this right here, like just seeing this, just another fucking trap to the downside. So one more sell here for bears, unless we can get above that hourly trigger. But even if we do, and this is the worst part, right? You get the hourly trigger come down, you squeeze up, and even if we squeeze up here, it's not a good sign for bulls. It's just another liquidity grab to go to the downside for one more leg down.
Welcome back to Power Lunch. Apple shares, they're holding up relatively well in today's market, down less than 1%. The company, though, we've been...
one more note for you out there, too.
Including
just one more heads up for you. If you are a supporter or a pro trader with us, I did post updates for both pro trader and supporter, and you're also going to get another one after the market close today for both supporter and pro trader. So if you're a supporter level, you can go check the website, and there are some updates available to you.
He wanted to do a story on China, artificial intelligence, and now we're learning from what he said last night, he wanted to bring Lina Khan on an interview, and Apple told him no. By the way, now that he's on the record about this, I asked Apple. They're big silent. I think they kind of want this to blow over. But what's interesting about this is, and a lot of commentary has already been bandied about, is this kind of ties back to the DOJ lawsuit. I just want to read you this one part. It's kind of bananas, but I'm going to read you this part of the DOJ lawsuit. Quote, Apple's conduct extends beyond just monopoly profits and even affects the flow of free speech. For example, Apple is rapidly expanding its role as a TV and movie producer and has exercised that role to control content. Interesting argument here. Basically saying, you know, because Apple is rich and successful, they don't get to choose what. That's like saying
they're like a tiny
But
player
it doesn't even matter how big they are. That's like saying the people in this building right now can't decide what airs on CNBC. The government's positioning here seems to be, I don't know, to compel Apple to let Jon Stewart interview Lina Khan or do a story on AI. No, that's not how it works. Apple was their employer, his employer. That doesn't mean it's not embarrassing or a blunder for Apple. It's a bad PR look, but it's not illegal. And it's just really interesting that DOJ is kitchen sinking everything.
So I take it you would say, if we extended this back to other companies that have been assailed on free speech grounds,
same thing.
The company's saying, we are the publisher here. We are the owner of this platform. We have the right to not post your posts.
Just like we have the, and this has been going on since Elon Musk took over Twitter, now X. And people seem to forget that First Amendment doesn't give you the right to post on Twitter.
It gives you the right to say it.
It gives you the right to say it.
It does not mean that,
exactly.
that a platform owner should be compelled.
So if Elon Musk wants to make it a safe space for Nazis to post, that's fine. He has a right to do that, but it's not illegal. And the government doesn't get to tell him that.
You know, when I hear you read that part from the DOJ lawsuit, it just makes me think that they're undermining their own argument by going after things like this, where Apple is just such a small player in the streaming wars. But I also wonder how it relates to sort of this broader picture, right? We say that Apple, the biggest downside of what's happening right now, all of this scrutiny from regulators, is that it's distracted.
Exactly.
Right? And this is
or
just
could
one
get distracted
more,
as this goes on. Yes.
Does Apple have to deal with this? Do they have to do anything?
On this specific thing, no, and they're not doing anything.
Yeah.
They're literally being silent on it, just kind of letting it blow over, letting Jon Stewart say what he wants to say.
Does it hurt? I mean, so much of their proposition, right? They have to go out to the biggest Hollywood producers and talent and say, work with us. Does that hurt them?
Yeah, welcome to the media business, Tim Cook, because you have to deal with different creators with different opinions who want to do different things. And some of them, like Jon Stewart did, aren't going to want to, have to do what you want content-wise.
Did Stewart air any of the stories that the China story?
No, but he did the AI story last night.
He did the AI story.
It's unclear if that was the exact
and
AI
did he
story.
interview Lena Khan on
Daily
Apple's?
Show last night?
He did it on Daily Show last night. Was he critical of Apple during that
That's
interview?
where he brought it up. He basically said to Lena Khan, Apple didn't want
me
me
to have this conversation with you.
And this is
and
not
now that I'm on Paramount, I can't. Is it Paramount? I think it's Paramount.
No, it's Paramount, but Comedy Central, yeah.
Comedy Central.
And Paramount Plus, I think you can stream it too. But I mean, this is not the first time Apple has played content moderator. You might remember years and years ago, they booted Alex Jones off the podcast app because of some nasty things he was saying related to Sandy Hook and so forth. So,
well, this was only part of the reason that Jon Stewart left Apple. There's supposed to be even more stories they wanted to
China,
do. So this
artificial
could just
intelligence,
be the start. I'm looking forward to see what he does on China and AI, which puts Apple in a really tricky situation.
The AI story is interesting, but the China story is also interesting because we know so much of Apple's tied up in China. They would be afraid. The last thing they want to do is have a very critical China story out there.
Do any of you guys? Let me ask you guys a question out there.
Well, this might work in their back.
Did you? Do any of you guys? You're listening to this Apple antitrust stuff? I always find Apple TV to be boring as fuck. I feel like I'm watching like an elevator music in like a TV or movie. I feel like I'm standing in an elevator all the time.
Appreciate it. All right, further ahead, a deep dive into home prices will explain how much more a monthly home payment is today than just a year ago. We'll be right back.
I mean, I'm not gonna lie. I signed up for it, but I signed up for Apple TV and I tried and I tried and I tried, and then everybody's like, "This show's great, that show's great, this movie's great," and I couldn't. I felt like I'd fall asleep. I'd be like, "Man, none of this." It had it's Netflix has that problem too sometimes with you can tell it's a Netflix movie or show. They have their own look about what they do. And Apple has this cleanly, clean, I don't know. It's like the aesthetic is very, I don't know. It's like the aesthetic of an iPhone. It's not like a TV or movie that you'd expect. I don't know. It's something about it that just rubs me wrong. Yeah, some of you guys, Severance I've heard was good. I watched part of Severance. Yeah, there's like a sanitariness to it. And they were talking about Jon Stewart couldn't speak about AI. Did you guys see the Jon Stewart AI special? It was fucking hilarious. And they wouldn't let him run it's Sterilife. Yeah, definitely. It was very sterile. They say that's going a lot. They say some of that shit's happening elsewhere too. They've said that, I guess they were saying that, or I was reading an article that Amazon and Netflix won't do. Remember when HBO used to do back in the day? They'd do documentaries that were, I don't know, what do I call them, racy, but would touch on hot issues that could be polarizing. And they were saying, this article I read said that Netflix is doing the same thing where they won't touch topics or make documentaries that could ruffle any feathers. Not that I'm trying to ruffle feathers, just it's it was there. Yeah, Formula One's pretty badass. The Formula One, I watched Formula One. That's pretty good. I like that. I like that show. And I did watch some of the golf show that was on Netflix. The no, not real sex. What was it? What was the other one? Taxi Cab Confessions.
NBC.
There's just
Welcome back to Power Lunch, everybody.
Yeah, dude, I love F1. F1's badass, and
are rising.
We have F1 here in Detroit, by the way, if you didn't know.
Santelli in Chicago.
We have F1 here. It's badass. It's so badass. It's loud. It's boisterous. The drama all behind it is badass.
Good Friday. It's still affecting markets. It's still.
The reason I was saying that too is because why it's piquing my interest is this week I watched.
Well, it looks like it's eased off. Pair it up with yesterday, and you.
So this week I ended up watching. I watched the Jon Stewart special on AI because of the Apple bullshit, and of course I know about the Apple antitrust. But then someone made a comment about, or someone made a post about Sicario, the movie Sicario, the film Sicario. Is evil, and that they liked seeing evil in a movie portrayed from humans. Like, how do you portray evilness in humans, in not in a fantasy way, but in like a real way, right? And it kind of piqued my interest because I thought to myself, I love Sicario. I think the movie's great. I love it. But it piqued my interest, the comment that was made, or the post that was made about the movie being a great vehicle to express evilness in people. And it made me think about the movie Scarface with Al Pacino. And it made me think about movies from the 1980s specifically. There's some of that carryover from the 1970s and stuff, but there was like, I've been going back to watch a bunch of 1980s movies, and they got away with so much shit back then that you could never get away with today. And you could express evilness in people, depravity, all kinds of stuff. Not just the stuff, but like blasted left, right, arms, legs cut off, heads cut off, all kinds of gnarly shit. And it made me think about Sicario because I was like, yeah, you know, if you didn't have any experience watching movies from the 80s, you would think that Sicario did a great and even more graphic. Did I lose? You guys lose the stream? Yeah, it's like the old ultra violence that they used to do. Are you guys losing the stream? David AMS said he lost the stream. Running Man. I read the book years ago, but I went back and watched the movie. I couldn't believe the amount of time that they spent on exposition before they even got to the movie. They were like writing a bunch of stuff. Have you guys seen that movie recently at all? The Running Man. I was shocked. I had no idea that like they had spent so much time on exposition. Come on, man, just do it again. Do it like you did it yesterday. Just take the fucking hedge off. I even put the fucking the 4 p.m. over here for it. Just squeeze it, baby. Squeeze it. I even want one date calls now for tomorrow, in case this gets squeezed into the open tomorrow. Oh, the stream is dropping? Ah, shit.
NYMEX diesel May futures settle at $2.71 a gallon. NYMEX gasoline May futures settle at $2.75 a gallon. US crude oil futures settle at $85.15 a barrel. That's up $1.44 or 1.72%.
Check 1 2. Mic check. No check, no mic. Yes mic, no mic. Can you hear me now? The room is too hot for the mic. Dude, I didn't even tell you guys this. I bought a new mic like fucking couple months ago. I bought a whatever they're called, the VCA. I don't know, it's a VCA, whatever it's called. I forget what it's called. I bought one of those expensive microphones and never hooked it up. Still no sound? No sound? God damn it. Jimmy, you can hear me? So YouTube is fine. Like,
NYMEX natural gas May futures set at $1.86.
I'm still here. It looks like YouTube can hear me, but Twitch cannot. Silent week stream.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
All right, let's try this again. Can you hear me now? Oh, the fucking stream is down. Fucking